So we will start now. See, today we are going to finish the PGBP chapter. Okay. The remaining part is 44 AB, 44 AD, 44 ADA and 44 A, and few questions which are remaining that we are going to solve. And once that is over, we'll start with agricultural income. Okay. So see, yesterday we had a discussion about compulsory maintenance of books of accounts. Okay. So which type of assessees are compulsorily required to maintain their books of accounts? So those assessees we did in section 44AA that okay, these are the assessees who are required to compulsorily maintain their books and which type of books and documents they are supposed to maintain. Now once the books are maintained, once the documents are maintained, okay, where these books are to be kept? Come on, tell me. Where will you keep your books? So the books will be kept at the normal place of your business, where you are doing your business, where you are doing your profession. So the normal place of your business or profession, at that place you are supposed to keep the books. You are doing your business in a shop in, for example, Madurai, and you have kept your books in Trichy. That is not okay, no? Okay. So where you are doing your business or profession activity, and that is the normal place where you are doing your business or profession, that place you should keep your books. But sometimes it is like that, you are doing your business activity from multiple premises. You might have multiple branches. Okay. So in that case, where you shall, you have to keep your books. At that time, you have to keep your books at the principal place of your business. That is the head office. Yes or no? That will be the place where you are supposed to keep and maintain the books and documents. Now, for how many years you are supposed to preserve your books? That is also important. See, the books are to be maintained at that place, at the place of your business. But there also you have to preserve your books for certain number of years. For example, if I am talking about previous year 24-25. So the books of accounts and documents for this year, I have to preserve them. I have to preserve them for 6 years. 6 years from the end of the relevant assessment year. So the books of this previous year will be preserved for 6 more years, but those 6 years will be counted from the end of the relevant assessment year. So can I say the relevant assessment year for my previous year is assessment year 25-26? So from the end of this relevant assessment year, 6 years from the end of the assessment year 25-26, meaning that you have to count 6 years from 26-27, 27-28, 28-29, 29-30, 30-31 and 31-32. Till 31-32 you are supposed to preserve these books. Because during that period, anytime the scrutiny can come, anytime you can be asked to, give your books for this year. So you shall maintain for these many years. Okay. Will you remember? Sure, everyone? Okay, perfect. So this was regarding your books of accounts and documents. Now, the books and documents which you have maintained, okay, those needs to be audited also. You have to compulsorily get them audited from a very respectable person, who a practicing chartered accountant will do the audit of your books for the purpose of Income Tax Act. Nobody else can audit the books of your accounts as well as the documents other than a practicing chartered accountant. So for the income tax purpose, you are supposed to get the books and documents audited from a practicing chartered accountant. But which persons are compulsorily required to get their books audited? Okay, that is given in 44 AB. And other provisions regarding the audit for the purpose of income tax they are given in 44AB. Getting my point, what I am trying to tell you all? Okay, so pay attention over here now. See, this was section 44, which we completed yesterday. Okay. Maintained at usual place of business at least 6 years from the end of the relevant year. I just told this, and I've already told you that how much will be the penalty for non-compliance of your 44AA provisions, right? Now, coming to the new section 44AB. 44AB talks about compulsory audit of books and documents for income tax purpose. We, sweetly we call this section as tax audit provision. We call this section as tax audit provision. Now, who is required to get the books of accounts and documents compulsorily audited for the purpose of income tax? So, any person who is engaged in any business. Did I write business or profession? Or I have written only business? I have written only business. Okay. So if you are a person engaged in any business, and the turnover of your business during the previous year is more than 1 crore. See, if it is 1 crore or less, then you are not supposed to get the books audited. Yes or no? But the moment the turnover of your business exceeds 1 crore, you are now liable to get the books audited. Now you have to separately maintain the books of accounts of your business where your turnover is more than 1 crore, and for that business the books will be maintained separately, documents will be maintained separately, and the books and documents of that business needs to be audited compulsorily because the turnover in that business is more than 1 crore. You are not a small assessee, you are a big assessee because your turnover is more than 1 CR. So we would require your books anytime. So we can ask from these type of assessees for their books at any time we can ask. So whenever we ask, your books should be ready to be given to us. They should be already, audited. Audited so that they are reliable books. And whenever we will demand, you can give it to me. Give it to us. Yes or no? So any assessee, any person who is engaged in any business, and in that business, if his turnover of that business is more than, if his turnover in that business is more than 1 crore, then for that business, he will have to separately maintain the books of accounts and get it audited. Will you remember? So this person compulsorily required to get the tax audit done. Now pay attention. If in your business, the turnover is more than 1 crore, still you are not required to get the books audited if during the previous year, whatever receipts are there in your business, out of those receipts, 5% or less receipts are in cash. As well as in your business, whatever payments are happening during the year, out of the total payments in your business, 5% or less payment happens in cash. Meaning that minimum 95% or more of your business receipts must be by way of modes other than cash, as well as minimum 95% of your payments from the business should be by way of any mode other than cash. Then you are not required to get the books audited even if the turnover is more than 1 crore. But it should be up to 10 crores. So what if your turnover is more than 1 crore, but it is not more than 10 crore? More than 1 crore, less than or equal to 10 crore. Then also you are not required to get the books audited if in that business total receipts, out of that 5% or less receipts are in cash, and in that business total payments which you are making from that business, out of that total payment 5% or less is in cash. But even if this criteria is fulfilled, still you will have to get the books audited if your turnover is more than 10 crores. Now for these type of assessees having this much receipts and this much payments in cash or less than that, they will be compulsorily required to get their books of audited once their turnover exceeds 10 crore. Getting my point, everyone? Sure. So this was all about those assessees who are required to do who are doing business. They will be required to get their books and documents audited if these conditions are fulfilled. Okay, next one. Now, if there is an assessee who is engaged in any profession, see, can you see color, yellow color talks about business, color, blue color talks about profession. Now, you are any assessee doing any profession. Did I tell you specified or notified 11 professions? No. Any profession, including those 11 professions. Yes or no? So if you are engaged in any profession and during the previous year, the gross receipt of that profession, if it is more than 50 lakhs, if it is more than 50 lakhs, for that profession, you will have to separately maintain the books and documents and get them audited. It is compulsory for you also. So who is required to get the books and documents compulsorily audited? This is 44AB. Now, are you supposed to get the books audited for income tax purpose? Yes or no? No need to get them audited again for income tax purpose if they were already audited as per the requirement of any other law. So if I tell you, see, if I tell you, if books of accounts and documents are required to be audited under any other law, then the law says, then 44AB says, no need to get such books of accounts, and documents audited again for Income Tax Act, because your books are already audited. Why would you get your books audited again, once more audited? No need to get them audited. But wait, they were audited as per any other law. So the audit report would have been made for that audit as per that law. Getting my point? So that audit report will not be of any use for the income tax purpose. So do one thing, don't get the books of accounts audited once more, but you will have to prepare an audit report. You will have to get an audit report prepared separately for income tax purpose. Audit report will still be made. But now this audit report will be made for the purpose of Income Tax Act separately. Because the audit report which you might have got prepared from a chartered accountant, that would be as per the requirements of that other law under which the books are getting audited. For example, if I talk about a company, Companies Act 2013 requires every company to get the books audited. Statutory audit is done. So are your books already audited as per Companies Act? Yes. And a statutory audit report will also be prepared for that. But that statutory audit report would have been prepared as per the provisions of the Companies Act, no? And that audit report will be of no use for the income tax purpose. For the income tax purpose, get the audit report prepared separately. So in this case, there is no need to get the audit report. No need to get the books of accounts audited again. But here, audit report for Income Tax Act separately to be prepared. And the format of audit report here is Form 3CA. So there is one form 3CA. In that format, your audit report for the income tax purpose will be made from those books which are already audited under any other law. Will you remember this? Hello, sir. Now pay attention. What if the books of accounts and documents are not audited? Not audited at all. Because there was no requirement under any other law to get the books audited. Getting my point? So what will you do here? Come on, tell me now. What will you do? So the law says that bloody at least get the books audited once for income tax purpose, no? Hello? If they were audited already, we are not compelling you to audit it again. But once for at least income tax act, get them audited if they are not already audited. Yes or no? So if not audited at all, then must be audited for the purpose of what? Income Tax Act. And now based on this audit, the audit report will be prepared. Audit report for Income Tax Act will be prepared. And this audit report will be prepared in Form 3CB. So one is Form 3CA and another one is Form 3CB. Getting my point, everyone? Sure? But wait. Along with these two forms, one more form will be prepared. Form 3CD. Along with this also, Form 3CD will be prepared. And what is this Form 3CD, friends? This Form 3CD is a statement of particulars. See, if someone asks you that what is the format for preparing audit report in Income Tax Act, you will say Form 3CA, Form 3CB. But along with that Form 3CA and Form 3CB, one more form is prepared and that form is Form 3CD. This is known as Statement of Particulars. Statement of Particulars. Here the name of the assessee will be given. Previous year, assessment year, permanent account number, residential status. If the entity is a partnership firm, how many partners are there? These partners are partners in other firms, the details of those firms. What is the profit sharing ratio of each partner? All such details. If the entity is a company, then how many directors are there? The DIN number. How many promoters are there? The shareholdings. Yes or no? All such details will be given in the statement of particulars. So when you pass your CA intermediate exams, you go for your articleship and all, no? You practically do all these things. See, right now the season has started. Right now the season has started. I'll tell you within 2 minutes you'll come to know what season I'm talking about. Tax audit season has already started now. Because August, September, these 2 months are usually very critical for tax audit purposes and all. Why? I'll tell you. Wait, see. Did you understand this much first? Tell me. So who is required to get the books audited compulsory? That is done. And if the audit will be done when the audit is not required again, and when at least once the audit is required, and in what format the audit report will be prepared. Okay. Now, see, you have been given 3 responsibilities. How many responsibilities? 3 responsibilities. That for this previous year, your previous year 24-25, in the assessment year, you are supposed to, in the assessment year 25-26, once this year will get over, then in the assessment year, the books of accounts and the documents for this year, the books and documents of this year will be audited in the assessment year, and Audit report will be prepared. Audit report in Form 3CA, Form 3CB, and audit report filed with the income tax department. All these three activities must be done in the assessment year. So what is the time limit? Time limit within which all these activities should be completed. So in the assessment year, get the books audited. Then get the audit report prepared. And then file that audit report with the income tax department. All these three activities should be completed within a specific time provided. So what is the time limit given for these activities to get completed? So that time limit is, they are saying, on or before the date which is immediately, on or before the date which comes immediately 1 month prior to the due date of filing ROI under section 139(1). So if you are an assessee liable for tax audit, you have to first check that what will be the due date of filing your ROI. The date which comes immediately 1 month prior to that date. Hello, the date which comes immediately 1 month prior to the due date of filing your ROI. On or before that date, these activities should be completed. Now let me tell you that if the assessee is a company, I'm talking about section 139(1), okay, no, due date of filing ROI. 139(1) says that if the assessee is a company or any person other than a company but who is liable for tax audit under section 44AB. Any person who is not a company but that person is liable for tax audit under section 44AB, or there is a partner of a partnership firm, the firm which is liable for tax audit under section 44AB. So firm is already covered in point number 2. Point number 3 is not made for firm. Point number 3 is made for the partners of such firm which is liable for tax audit. So for all these persons, what did I say? For all these persons, the due date of filing ROI, return of income, the due date for filing the return of income for them is 31st October of the assessment year. That means for this previous year 24-25, your return of income must be filed in the assessment year on or before 31st October. If you are a company, on or before 31st October. If you are an assessee other than company, see, company may or may not be liable for tax audit, irrespective of that. In the case of companies, the due date for filing return is 31st October only. But if you are any person other than a company, that means if you are an individual, if you are HUF, if you are a firm, if you are AOPBY, if you are any person other than a company, for you also the due date will be 31st October of the assessment year. If you are liable for tax audit under section 44AB. Getting my point? And if you are a partner of the firm which is liable for tax audit, partner of the firm which is liable for tax audit. So for the firm also it is 31st October because the firm is liable for tax audit. And every partner of that firm, for those partners also their individual return will be filed on or before 31st October. Getting my point? Hello sir. Then 31st October will be the due date of filing ROI in the case of these assessees, and this due date is given in 139(1). There are some assessees for whom transfer pricing audit provisions are also applicable. So the assessees to whom the transfer pricing audit provisions are applicable, for these type of assessees, the due date of filing ROI is 30th of November, 1 month extended. Why? Because these type of assessees have some extra work to do. Apart from the tax audit, they are also required to get the transfer pricing audit done. Very interesting area. When you will be in the final CNO, this transfer pricing provisions and everything are there. The transfer pricing, what is transfer pricing? Okay. What is the importance of transfer pricing? Why the provisions of transfer pricing are made? Then for that transfer pricing also, the assessees who are engaged in those transfer pricing transactions, for those assessees, there is a separate requirement of transfer pricing audit also. So along with the tax audit, they are going to do transfer pricing audit also. So if the assessee for whom the transfer pricing audit provisions are required, they will be doing one audit extra, no? So for them, the return filing due date is 1 month ahead, meaning that it is not 31st October, it is 30th of November. And for all other cases and assessees, the due date of filing return of income is 31st of July of the assessment year. Okay. Now I would like to ask you that according to you, what should be my due date of filing ROI? When I file my return of income, what is my due date? Even I am earning income, no? So what should be my due date of filing ROI? For me, it is 31st October. Why? Because I am not a company. And I am also not liable for tax audit. My turnover from the profession does not exceed 50 lakhs. I am into a profession, no? CA profession, CA practice, teaching profession. So the professional receipt, gross receipt for me does not exceed 50 lakhs in a year. But I am a partner in a firm. And that firm is liable for tax audit. I am a partner in a CA firm. And that firm has a turnover of more than 50 lakhs. Gross receipt of more than 50 lakhs. So that firm is liable for tax audit. And as a result of that, I being the partner of that firm, I am also liable to file my return on or before 31st of October. If I would not have been the partner in that firm, no. So for me, my due date would have been 31st July. Because in my own profession, my gross receipts does not exceed 50 lakhs. Getting my point, everyone? Sure. Now these are the due dates. Tell me, for an assessee who is engaged in any business or any profession, if that assessee is covered by tax audit provision, what will be the due date of filing the ROI for that assessee? 31st October. Hello? But what if that assessee is an assessee who is covered by tax audit provisions also, but required for transfer pricing provision? 30th of November. So right now we don't focus on this point. Okay, now we will focus on 31st October. So for you, if you are covered by tax audit provisions for previous year 24-25, you will file your return. What will be the due date of filing your return? In the assessment year, it will be 31st of October. So can I say the due date for filing ROI under section 139(1) is 31st of October 2025? The date which comes 1 month immediately preceding to this date. The date which comes immediately 1 month preceding to this date. What will be that date? This is the date by which the audit should be completed. Audit report should be made and audit report should be filed to the income tax department. And once that is done, now the return will be filed within the next 1 month. Earlier, few years back, both these due dates to get the audit done, audit report, filing of audit report, and also the filing of return, all these due dates were same. It was 30th September only. But the government was facing many problems. Also, the taxpayers were facing many problems because on 30th September and a week or 10 days prior to that, the servers did not take that much data, did not take that much traffic. It used to be always down. If you are filing an audit report along with the return of income for these many assessees, and that too also together, the traffic is such huge traffic on the income tax website, it used to crash every now and then. So there were many difficulties faced by chartered accountants and the taxpayers, that we are filing both the things together. Audit report gets uploaded, but return does not get uploaded. Sometimes the returns gets uploaded, audit report remains. Because of so much of data, the servers and the websites used to get crashed. So few years back, 3-4 years back, they came up with the amendment that okay, let's keep the audit due date same, 30th September, but extend the due date filing, return filing due date. They have extended by 1 month, 31st of October. So now both the things will be different. There will not be too much of the load on the servers, and it will be easier to process the data and all. So what you all will be doing when you will be getting into your articleship in any firm, August and September month you will be doing the audits and filing the audit reports, tax audit reports. Getting my point? For the clients of your principal. And once that is done, the majority of the part is done now. Now only the return uploading process will begin. And that will begin from 1st of October onwards. So starting from August till 31st October, you are occupied in your articleship, in your work. You usually don't get the leaves also during these times. Because that time, your principal will have too much of pressure to meet these deadlines. What if these things do not happen within time? Tax audit provisions are not complied with. You did not get the tax audit done. Okay, audit is done. Tax audit report is not made. Or tax audit report is also made, but it is not filed. Or none of the activities are done where you were required, but you did not get the audit done. You did not, you did not get the audit report made. If there are compliance issues, meaning that you have not complied with the provisions of section 44AB, there will be a penalty on you. That penalty will come in 271B, 44AB. So penalty will be 271B. 44AA. So penalty will be in 271A. 44AA. Contravention. So penalty will be in 271A. Flat 25,000 penalty. And if 44AB not complied, then penalty will be under 271 only, but 271B. And what is the amount of penalty? 0.5% of your turnover or gross asset, as the case may be. Or 1,50,000 rupees, whichever is lower. Thank God it is lower. Meaning that just imagine if a company is there, if a firm is there having 100 crores of turnover, 50 crores of turnover, 0.5%. Calculate 0.5% of 50 crores. 50 into 0.5%. 0.25 crores means 25 lakh rupees or 1 lakh 50, whichever is higher. Should you pay 25 lakhs penalty? So that will be too much, no? So government said no, 0.5% of your turnover or 1,50,000, whichever is lower. So 1,50,000 is the maximum limit to which you will be paying the penalty, not beyond that. Okay, either 1,50,000 or 0.5% of your turnover, whichever is lower. Got it? This was your tax audit provision. 44AB done. Now pay attention here. Books of accounts and documents not to be audited again, already audited, audited compulsorily for IT purpose if they are already not audited under any law. But audit report must be prepared whether books and documents are already audited or not audited will not make any difference. Audit report for the income tax purpose will be made, and that audit report will be made in Form 3CA, Form 3CB, and along with these two forms, one more form will go, that is Form 3CD, Statement of Particulars. Now you are supposed to get the audit done, get the audit report made, and file that audit report. What is the time limit for that? Time limit I have just told you. The date immediately 1 month preceding to the date of filing return. So on or before 30th September. What did I say? On or before 30th September, audit must be done, audit report must be prepared, and that audit report must be filed with the income tax department. What are the due dates of filing ROI? These due dates I have already explained. Will you remember this? Sure, sir? Should I move ahead? Very good, sir. Come, one question we'll solve. Very easy question. Question number 15. Till 14 we have completed everything, right? Do you remember compulsory maintenance of books of accounts 44AA? You remember, no? This question is based on that. Vinod is a person carrying on profession as film artist. Film artist, do you remember film artist? Notified profession. Doctor, lawyer, then engineer, interior designer, and after that few professions which are notified by CVDT. In those 11 professions, film artists were also there. So is it a notified profession? Film artist is a notified profession under 44AA subsection 1. It was covered in point number 1 only. So if you are doing any notified profession and the gross receipt of last 3 years, all the 3 years, if that is more than 1,50,000. So for this year, you will have to compulsorily maintain the books and documents separately. Hello? For this profession. Compulsory maintain. Which books? The books which are prescribed in Rule 6F. Do you remember those 5 books? Cash book, ledger, journal, invoices which you are issuing to the clients, the carbon copies of them in serially numbered format, then original bills of all the expenses. These Rule 6F prescribed books and documents will have to compulsorily maintain. But for that, the gross receipt of the last 3 years, all the last 3 years should be more than 1,50,000. Do you remember that? Now see, he is a film artist. His gross receipt from the profession are, last year it was 2,10,000. Last year it was 180. Both the years more than 150. But can you say last year it was only 1,15,000? Not more than 1,50,000. So for all the 3 years, the gross receipts more than 1,50,000? No. And if it is not expected also in this year that it will go beyond 1,50,000. If last 3 years, not more than 1,50,000, but it should be expected that in this year it will be more than 150, then compulsorily maintain prescribed books, yes or no? But if in this year also it is not expected that it will be more than 1,50,000, then will you maintain books? Yes, then you will be covered in point number 2, not point number 1. You will be covered in point number 2. So any notified professionals, if not covered in point number 1, meaning that last 3 years gross receipts does not exceed 1,50,000, or this year's gross receipt is not expected to be more than 1,50,000, then definitely you will be covered in point number 2. You will also have to compulsorily maintain, but not the prescribed books, but the books as would enable your assessing officer to compute your total income. Those books you are supposed to compulsorily maintain. That is the provision which we have studied, no? So they are saying, what is his obligation regarding maintenance of books of accounts for the assessment year 25-26 under 44AA? Tell me. What is his obligation? Is he required to maintain the books? Yes. Looking at this, it does not seem that he is required to maintain the prescribed books. But wait, if in this year it is expected that it will be more than 1,50,000, then prescribed books. But if in this year it is not expected that it will cross 1,50,000, then also you will maintain compulsorily. Compulsory requirement, obligation to maintain books compulsory. But now you will not maintain prescribed books, but you will maintain such books which would enable the assessing officer to compute your total income properly. That is the answer. Please read the answer once. Shall we start with the new section? Okay, pay very much attention to this section. Very important, easy, but they have tried to make some complications. Don't worry, it is easily understandable, very easy, but very important. Why? If you'll understand this provision properly, next 2 provisions you will understand very fast. Okay, in the next 2 provisions, few things will change. Otherwise, everything which you will be studying in this section, majority of the things will be common in 44 ADA and 44 AE. So pay attention on this section. 44 AD. This section, guys, please see, besides 44 AD, what is written in red color? Come on, tell me, what is written in red color? Presumptive provision. PGBP income is presumed, meaning that by following the regular provisions of the Income Tax Act, you are supposed to first take all the PGBP incomes, taxable PGBP incomes. Then you are going to claim different deductions out of this. Then you'll have to also remember the disallowances which are there, so that you don't end up taking those things as a deduction which are disallowed. Done, no? So you'll have to remember all those things. And on top of that, if your turnover is more than 1 crore, then you'll have to separately maintain the books also, and you'll have to get them audited also, if your turnover from the profession or the business. Okay, no? So what happens here? Let's see, you are an assessee. You're a small assessee, individual HUF or firm at the most. Your turnover has exceeded 1 CR. Not that much, but it is exceeding 1 CR. Now you will be required to compute your PGBP income as per the PGBP provisions, regular provisions, meaning that, see, you have to remember so many things. That, okay, I will have to take this income, I will not take this income, I will take this income. Okay, these expenses I will claim as deduction, these things are disallowed. You have to first remember all these things. Get yourself confused also. Throughout the day, your mind is occupied in all such things. Then on top of that, an additional requirement will be there on you to maintain the books for this business and get them audited also, because your turnover is more than 1 CR. So see, you are not a very big businessman, you are a very small businessman. Okay. So for people like you, if we are putting few conditions, extra conditions, those conditions are bothering you. You are not able to focus on your business. Getting my point? And there are many tax evasions also happening at lower level. You are not showing your correct income properly. So what the government has done, government has come up with section 44 AD. It is a presumptive provision which says that if you are doing certain specific type of businesses, no, other than few specific business, if you are doing some specific type of businesses, no, for those businesses, even if your turnover is more than 1 CR, but the turnover should not be more than 2 CR. Do one thing, show 8% of the turnover, at least 8% of the turnover as your profit of that business or more amount which you are actually earning from that business. See, you have to actually show the correct income of your PGBP, which is higher only. But even if you are not showing that higher amount, at least 8% of your turnover you show as your profit for this business, no? We are not asking you to show profits 20%, 15%, 25%. In business, usually any type of business is done in India, no? Any businessman will minimum earn 8% as profit on the turnover. So why don't you just show the 8% of your turnover as the profits to us? Or a higher amount as a profit, but at least show 8% of your turnover, no? If you show at least 8% of your turnover, no? So even if your turnover is more than 1 CR, even if your turnover is more than 1 CR, even if you are required to maintain the books and get them audited, we will not tell you to maintain your books to get them audited. No need to maintain the books, no need to get them audited, no need to remember the regular provision. Just show at least 8% of your turnover as a profit. Just show 8%, minimum 8%, or a higher amount which you might be actually earning. If you are showing higher amount, we will not tell you to show less amount. If you are actually earning a higher profit, show the higher profit, but at least show 8%, no? So we will relieve you from these tensions. What tensions you are having? Remembering which incomes will be taxable, which incomes will not be taxable, whether I am supposed to take this deduction or not. You will have to remember the deduction sections, you will have to remember the disallowance. Regular way, you are not supposed to calculate your PGBP income now. And if you are not calculating regularly, just maintain the records of your turnover and show 8%. That's enough for us. No need to maintain separate books and documents and no need to get them audited. Even if the turnover is more than 1 crore, but the turnover should not be more than 2 crores. So it will be good for you. Why? Because you are relieved from that painful activities. And it will be good for the government also that people will start at least showing 8% of their turnover as what? Profits. Okay. Okay. Kaushik, don't worry. This question will be addressed. What if loss? Everything will be done. But first of all, who can take the benefit of this section? Everyone can take the benefit of this section? No. Only an assessee who is a resident individual HUF or a firm. And if it is a firm, then firm does not include LLP here. Meaning that if you are LLP, no, you cannot take the benefit of 44 AD. No. Other than LLP, any firm. Other than LLP, any firm or HUF or individual, but you must be a resident. So if you are any of these assessees and you are doing any business, what did I say? Any business. But the business should not be earning commission and brokerage. Business should not be agency business. Business should not be a transport business. Or you should not be engaged in any notified professions of section 44AA subsection 1. Do you remember those 11 professions? So if you are doing any of those 11 professions, for you we have made separate provisions, presumptive provisions, 44 ADA. Go and follow that. Don't follow this. If you are into transport business, for you we have separate presumptive provision, 44A. Go and follow that, not this. And if you are into a commission or agency business, no, we cannot allow you to show only 8%. If you are into agency business, no, we cannot allow you to show only 8%. Your profits are comparatively higher only. And for you all, we cannot accept that you show 8%. If you are into commission or if you are into the business of earning commission or brokerage, or you are in the business of agency business. So which business you should not do? Number 1, agency business. Number 2, business of earning commission and brokerage. Number 3, transport business. And number 4, 44 AD professions. 11 professions those. Yes or no? Other than these, any business you are doing, any business, and the turnover of that business during the previous year does not exceed 2 crores. Can your turnover be exactly 2 crores? Yes, still you can follow. But the turnover should not be more than 2 crores. Can you follow 44 AD if your turnover is 1.5 CR? Yes. Can you follow 44 AD if your turnover is 80 lakhs? Yes. Your turnover should not be more than 2 crores. So from this business, if the turnover is not more than 2 crores, then whatever the turnover you are having from this business, show 8% of that turnover. You have the option. What did I say? You have the option to show 8% of that turnover as your PGBP profits. We will assume that you have claimed all the deductions and we have allowed all the deductions under section 32, 37(1). No need to claim them separately. Hello, sir. If you are showing at least 8% of your profits, 8% of your turnover as your profits, show this at least 8% or a higher sum as your profits. No need to separately claim 30 to 37(1) deduction. You have already claimed and we have already allowed, it will be assumed if you are showing only 8%. Understanding? And also you are not required to maintain the books and get them audited. These are the benefits which will happen to you. Will you remember? Hello? So, 30 to 37(1) deduction will you take? Or you will just show turnover into 8%. This is the profit. That's it. Now showing this profit on a presumptive basis. This is an assumed amount, notional amount which will be treated as your business profit. Wait, all the deductions which are available under 30 to 37(1), no. We will assume that this profit is after claiming that deductions only. So those deductions will not be allowed separately. It is assumed that you have claimed and we have allowed. Show this much profit. Will you maintain books? No, no need to maintain. Will you get them audited? No, no need to audit. Even if your turnover is more than 1 crore, but it should not be more than 2 crores. Will you remember? Pay attention now. Sometimes, even if your turnover is more than what? 2 crores, even if your turnover is more than 2 crores, still you will be allowed to follow 44 AD. This is an amendment which happened last year. Still, you will be allowed to follow 44 AD. See, usually if they have said that turnover should not be more than 2 crores, only then you can follow 44 AD. Yes or no? So if your turnover exceeds 2 crores, you will not be allowed. But there is one exception, that even if your turnover is more than 2 crores, still we will allow you to take the benefit of 44 AD, show your income on a presumptive basis, if out of that turnover, 5% or less turnover is received by way of cash. Minimum 95% or more is recovered through modes other than cash. Then even if your turnover is more than 2 crores, for that you can show what? You can show presumptive profits. But the turnover of that business should not be more than 3 crores. What if it exceeds 3 crores also? Then nothing doing. Calculate the PGBP income regularly. Claim the deductions 30 to 37(1). maintain the books also and get them audited. What if out of the total turnover, for example, the total turnover was 2.5 CR. Take 5% of this. 2.5 into 5%, you will get 0.125. Hello? Hello? Meaning 12,50,000. So out of your 2 crore 50 lakh thousand of turnover, 12,50,000 or less should be in cash. Then only you will be allowed to follow 44 AD even if your turnover is more than 2 crores. Yes or no? Is your turnover more than 2 crores? Yes, it is 2.5 crores. So for that turnover, can you show 8%? Yes, you can show. Provided out of that turnover, 5% or less is received in cash. What if 5% or less is not received in cash? More amount is received in cash. Then even if your turnover is below 3 crores, still you are not allowed to follow 44 AD because out of the total turnover, 5% or less is not received in cash. More amount is received in cash. Got it, sir? Sure. What if your turnover is 2 crores or less? Then this requirement does not arise only. Then this requirement is not there. This requirement is there if your turnover is more than 2 crores. Still you can follow 44 AD. Provided out of that turnover, 5% or less is received in cash. Minimum 95% or more must be received by way of other modes other than cash. Sure, sir. Then for that turnover, you can show 8% even if it is more than 2 CR. But should not be more than 3 CR. Now pay attention. Turnover of your business is 1 crore 80 lakhs. Is it possible? Yes or no? Can your business have a turnover of this much? Yes. Is it more than 2 crores? Or less than 2 crores? Less than 2 crores. Can you follow 44 AD? Yes, absolutely you can follow. If the turnover is within 2 crores, no, you can follow 44 AD. What you will do? 8% of this amount or a higher amount show as a PGBP income. 8% of this amount. Done? What if your turnover is 2 crore 80 lakhs? Can you follow 44 AD and show presumptive income? 8% of this amount as your presumptive profits. Can you show? Usually no. But there is one exception. If out of this turnover, 5% or less is received in cash, take 5% of this. Come on, do it fast. 14 lakhs. 10% will be 28 lakhs. So half of that, 5% is 14 lakhs. Yes or no? 14 lakhs out of this turnover should be received in cash or less than that. Now they have told you that out of this turnover, only 10 lakh is received in cash. Out of this turnover, only 10 lakh is received in cash. Can I say the cash amount of the turnover does not exceed 5% of the total turnover? Yes or no? Meaning that, are you eligible to still go for 44 AD? Yes or no? So what will happen? Come on, tell me. Take 8% of this turnover as your profit. Minimum 8% or more you can do. Why? Because this does not exceed 3 crores. And out of this, 5% or less amount is received in cash. Only 10 lakh is received in cash, no? Sure, sir. Now I will give you one example. If your business has a turnover of 1 crore 50 lakhs, only 1 crore 50 lakhs turnover, okay. Now in this business, no, your turnover is 1 crore 50, 8% of this will be how much? 1 crore 50 lakhs into 8% will be 12 lakhs. So minimum 12 lakhs or a higher sum. Minimum 12 lakhs or a higher sum you can show as your PGBP income under section 44 AD. Done. No need to claim the 30 to 37 deductions, and no need to maintain the books, no need to get them audited, but at least show 12 lakhs. Now this 8%, no, this 8% will be taken as 6%. Good only, no? Showing 8% is better or showing 6% is better? 6% is better because that will be lower than this 8%. Yes or no? Would you like to show 6% of your turnover? Would you like to show 6% of your turnover? Kaushik, you would like to show 8% or you would like to show 6%? Would you like to show 6% of your turnover as your profit? Yes or no? That you can show only for that turnover which is received in this year or on or before the due date of filing of ROI by way of prescribed modes. If out of this turnover, if the entire turnover is received in this year or on or before the due date of filing ROI, and that too also in prescribed modes, then for this entire turnover, don't take 8%, take only 6%. But is it possible? No. To receive this entire turnover in other than prescribed modes? No. So out of this turnover, whatever turnover you have received in this year or on or before the due date of filing ROI of this year, whatever turnover out of this you have received. Hello, how much I have done? 1 crore 50 lakh into 1 crore 50 lakhs into 8%. 12 lakh, yes, correct. Okay. So out of this 1 crore 50 lakhs, only 1 crore is received. Only 1 crore is received by way of prescribed modes during the previous year as well as on or before the due date of filing ROI. So for that 1 crore you can show 6%, but on the balance 50 lakhs you will have to show 8%. Will you remember this? Sure. Now see, if your turnover was 1 crore 50, out of this received in previous year 24-25, see, this is the turnover of your previous year 24-25 only. Huh? So for 24-25 your turnover was 1 crore 50, and out of this during the same previous year you are receiving, example, 1 crore 30 lakhs. Possible? Now received in the next year in previous year 25-26, and out of that on or before ROI due date, how much will be received in the next year? Let's say this was 150, this is 130, 20 lakh will be received in the next year. Okay, no? Out of that 20, on or before the due date, you received 15 lakhs. And after ROI due date, you are receiving 5 lakhs. Sure, sir? Now tell me, on each turnover, see, 130 is out of that 150 only. 15 lakh is out of that 150 only. And 5 lakh is also out of that 150 only. For that entire 150, you are supposed to show 8%. Yes or no? So whatever is the turnover for this year, 1 crore 50, on that you are supposed to show 8%. So on 130, how much we will show? 8%. On 15, how much you will show? 8%. On 5 lakhs, how much you will show? 8%. If this is not received by way of prescribed modes, but if all these figures are received in prescribed modes, then 6%, 6%, hello sir, 6%, and for that you cannot do 6%. For this you will have to do 8%, even if received by prescribed modes. Is it received in this year? No. Is it received on or before the due date of filing ROI? No. then on that you cannot take 6%, you will have to take 8% only, even if it is received by prescribed modes. But wait. Don't write anything. First of all, did you understand this breakup? Now out of this, no, in current year, how much you have received? 1 crore 30. Is it necessary that entire 1 crore 30 you will receive in prescribed modes? No. Some you will receive in prescribed modes and some you will receive other modes. Yes or no? Out of this 15 also the same can happen. Out of this 5 also the same can happen. So what I am going to do? See, the 1 crore 50 lakhs turnover which you had, no? The 1 crore 50 lakhs turnover which you had for this previous year, out of this, during the previous year 24-25, we have received 130. And out of this 130, some was in prescribed modes and some was in other modes. Out of this 15 lakhs also, some was in prescribed modes and some was in other modes. Out of this 5 lakhs also, some was in prescribed modes and some was in other modes. Now let's write down some amounts also. Out of 1 crore 50 in this year, how much you recovered? How much you received? 1 crore 30. But out of that 130 which you have received in this year, no, only 1 crore 20 lakh was received by way of prescribed modes. Remaining 10 lakh was received by other than prescribed modes. Now the 15 lakhs which you are receiving in the next year, but on or before the due date of filing your ROI, out of that 15, 12 lakh was received by way of prescribed modes and 3 lakhs other modes. And 5 lakh, you are receiving that 5 lakh after the due date of filing ROI. And out of that 5 lakh, 4 lakh was received by prescribed modes and 1 lakh is received in other than prescribed modes. What I have done, friends, pay attention. This entire 1 crore 50, no, I have bifurcated that 150 in these 6 parts. On this also you are supposed to show 8%. On this also you are supposed to show 8%. On this also you are supposed to show 8%, 8%, 8%, 8%, because this year's turnover minimum 8% or more you are supposed to show. Yes or no? But wait, out of this turnover you are supposed to take, on the entire turnover you are supposed to take 8% only. Yes or no? But out of this turnover, have you received something in this year by way of prescribed modes? How much? 1 crore 20. On that, don't take 8%, take 6%. Have you received something on or before the due date in prescribed modes? How much? 12 lakhs. On that also don't take 8%, take 6%. Sir, but this was also received in the current year and this was also received on or before the due date. Then why are you not taking 6%? Because that was not received in prescribed modes. So now tell me, 6% of 1 crore 20 lakhs will be how much? 6% of 1 crore 20 lakh will be how much? 7 lakh 20,000. 8% of 10 lakh will be 80,000. 6% of 12 lakh will be 72,000. 8% of 3 lakh will be 24,000. 8% of 4 lakh will be 32,000. And 8% of 1 lakh will be 8,000. Did you all get it? The turnover, out of the turnover, whatever turnover which is received in my previous year by way of prescribed modes, For that turnover, I can take 6% as profit. The turnover for this year, hello, which I have received in the next year on or before the due date by way of prescribed modes, for that turnover also I can take 6%. Rest entire turnover out of 1 crore 50, I will take only 8%. So even if I don't bifurcate all these amounts, I just identify that amount which was received in this year or on or before the due date of filing ROI of this year. On that I will take 6%. On the balance, entire amount I will take 8%. Done, sir. So can you total 7,20,000 plus 72 plus 80 plus 24 plus 32 plus 8,000. How much is this? Come on, tell me. How much is the total for this? The total is 9,36,000. This is amount or a higher sum. This amount you should show as an income under section 44AD. Minimum this much. Will you be able to show it? Easy, no? Now pay attention. 44AD. If you show minimum this much or a higher sum, you are following 44AD? Yes. Because you are showing at least this much or higher sum, you are following 44AD. Once you follow 44AD for any year, listen to me very carefully. Once you follow 44AD for any year, then you will have to follow 44AD for the next 5 years also. If in the next 5 years your turnover does not exceed 2 crore, on that turnover minimum 8% or more you are supposed to show as your PGBP income. Meaning that if in the previous year 24-25 your turnover was less than equal to 2 crores, so on this turnover 8% or higher sum, and sometimes on some turnover 6% can also be taken, yes or no, as the case may be. 8% or higher sum you can show on this turnover. Meaning that in the 24-25 you have already shown this. So in 24-25 you followed 44AD. First time you are following right now. Okay, no? So they are saying that the year in which you are following 44AD first time, 5 years after that, meaning next 5 years. Next 5 years, come on, tell me. 24-25, after that next 5 years will be 25-26, 26-27, 27-28, 28-29 and 29-30. Next 5 years, if in all these years your turnover was less than equal to 2 crores, in some cases it can be 3 crores also, yes or no? But we are taking 2 crores, okay, no? Turnover is less than equal to 2 crores, less than equal to 2 crores, less than equal to 2 crores, less than equal to 2 crores. So on this turnover, 8% or a higher sum, you are supposed to show this amount only, 8% or higher sum only for this year also, for this year also, for this year also, for this year also. For every year you are supposed to show minimum 8% or a higher sum. This is the requirement. So once you enter in 44AD, then for the next 5 years, if your turnover is up to 2 crores, stay in 44AD only. Meaning show 8% minimum for every year. Every year, show minimum 8%. But is it possible that in any of the year, turnover will exceed 2 crores? I will talk about that later on. But let us now assume, what if in all these 5 years your turnover was up to 2 crores, not increasing 2 crores? Yes or no? 24-25, 24-25, your turnover was 1 crore 10 lakhs. Then every year your turnover is 1 crore 20 lakhs, 1 crore 35 lakhs, 1 crore 30 lakhs, 1 crore 45 lakhs, 1 crore 80 lakhs, something like that. Every year the turnover is within the limit of 2 crores. Let us assume that. So every year you are supposed to follow 8% or more, 8% or more, 8% or more of the turnover of that year. Meaning every year you are supposed to follow 44 AD now. But what if you followed 44 AD in the first 3 years? You followed till 27-28. 27-28 till that year, you were showing minimum 8% or a higher amount as profits as per 44 AD. But now in 28-29, even if your turnover is up to 2 crores, you had to show 8% or higher amount. But in 28-29, your actual PGBP income was lower than 8% or you had a loss. Possible? So, for example, in 28-29, your turnover was 1 crore 40 lakhs. How much? 1 crore 40 lakhs. Take 8% of that. Please take 8% of that. So, 1 crore 40 lakhs into 8% will give you 11 lakh 20,000. So, in the year 28-29, you have to actually show minimum how much you are supposed to show. 11 lakh 20,000 you have to show. But is it possible that in 28-29 you incurred more expenses? There was some loss in the business. Hello? And as a result of that, in 28-29, when you calculated your income on a regular basis, you came to know that in this year, your actual profit is very less as compared to 11 lakh 20. Or in this year, you might have incurred loss. Possible or not? So in this year, even if you had to follow 44 AD, you had to show 11 lakh 20,000 minimum as your income for 28-29. But in this year, now you are coming out. Meaning that you are going and telling the government that government, please, in the year 28-29, even if my turnover is not more than 2 crores, even if I have to show minimum 8% as my profit, but in this year, I want to show lower amount as profits. Lower amount. Lower amount means lower than this amount also. Can you show? Can you show lower amount of profits in this year? They are saying that once you enter, for the next 5 years, you will have to follow 44 AD. So, in the 4th year, you will have to minimum show 11 lakh 20. But you want to show lower profits in that year. Can you show the lower profits in that year? Government says no problem. In the 4th year, your profits are coming less, no? Less than 11 lakh 20. Meaning 8% amount was 11 lakh 20. You are trying to say that in this year, your profits are lower than 11 lakh 20 also. Or you are incurring a loss. No problem, no problem. You are allowed. What did I say? You are allowed to show lower profits in this year. But we would like to see that this year, how come you are not earning 8% also? Now in this year, if you want to show lower amount as your profits, then this lower amount will be calculated by following regular PGBP provisions. Tell me, regular PGBP provisions will be followed? Regular PGBP provisions followed means you will take PGBP incomes, you will take the deductions, you will consider the disallowances, and then you will calculate the regular provisions, PGBP income, and that PGBP income is lower amount which is calculated as per regular provisions. Yes or no? Will you claim 32-37-1 deductions? Yes. Will you take all the PGBP incomes? Yes. Will you take deductions from 32-37-1? Yes. Disallowances you will ignore. So regular way you will have to calculate this, and by regularly calculating you came to know that your profits are actually lower or you are having a loss. So that lower amount you are showing in this year, is it allowed? The answer is yes, it is allowed. But wait, even we would like to see that how come this year you are not earning 8% also. The government will ask you, no, this year you are showing less. Okay, no problem, show less. But even we would like to see that how in this year you are not even earning 8% also. You are showing less amount. So how we will come to know? From your books only. So for this year, you are supposed to maintain your books of accounts as per 44A, double A, and get them audited also as per 44AB. But wait, this books of accounts will be maintained and audit will be done. This books of accounts will be maintained and audit will be done only if for this 28-29 your total income was greater than your basic exemption limit. What if in this year your total income is not more than your basic exemption limit, meaning you are not liable to pay tax only? So even if you are showing lower profits, but since your total income does not exceed basic exemption limit, you are not liable to get the books audited. No need to maintain also, no need to get them audited. But wait. In this year, if you are showing lower profits, you can show. But for this year, you are supposed to compulsorily now maintain books of accounts and audit them. Only if your total income for this year is more than your basic exemption limit. Only then maintain the books and get them audited. Sure, sir. But now wait. In this year, no. We thought that you will follow 44 AD. At least you will show how much? 8% as your profits. Sure. But did you show 8% or you are showing lower? Lower? In which year? 28-29. Now from here. Next 5 years. So the year in which you are showing lower profits, after that for next 5 years, meaning which years? Previous year 29-30, 30-31, 31-32, then 32-33, and then last 33-34. Can I say these are the next 5 years? 1, 2, 3, 4, 5. In all these years, what did I say? In all these years, now even if turnover was less than equal to 2 crores, still you cannot follow 44 AD now. Now in every year, no, you will calculate PGBP income regularly. If the turnover for all these years was more than 1 crore, no, books will be compulsorily maintained and it will be audited also. Because we are not allowing you to follow 44 AD for these 5 years now. At least have some consistency, no? We are following 44 AD, once follow it for minimum 5 years, no? Coming, again leaving, coming, again leaving, puts you also in trouble and puts us also in trouble. We have made these provisions for your betterment so that you don't have to worry. You don't have the botheration of maintaining the books, getting them audited. So for that, we are demanding at least show 8% every year. Forget about regular calculation, but still you are doing regular calculation. Still you are calculating lower profits and showing the lower profits. No problem. So we will accept that lower profits. But remember, if you have started calculating lower profits, no, meaning that you don't mind calculating business income on a regular basis. You don't mind maintaining the books also. If the turnover is more than 1 crore, you don't mind getting them audited also. That is the reason why you are coming out now. Come out, follow regular. We will not allow you to enter you for the next 5 years. Even if in the next 5 years your turnover is up to 2 crores, still we will not allow you. Will you remember? And in any of these years, if your turnover is more than 1 crore, maintain the books, also get them audited also. Now 2 crore limit will not be applicable to you. Because if you would have followed 44 AD, automatically your tax audit limit would have got increased from 1 crore to 2 crores, till 2 crores, show 8%, and no need to maintain the books and get them audited. You are not required to get the tax audit done. So for you, by default, the tax audit limit would be 2 crores and not 1 crore. But for that, you need to show what? 44 AD. Got it, sir? Everyone? Interesting, no? Now wait. 44 AD, no? What was our previous year? Previous year, 24-25. This was the year in which your turnover was up to 2 crores. And on this turnover, 8% or more. You have already shown this amount. Meaning that in this year, are you following 44 AD? So for the first time, if you are following 44 AD in this year, do one thing. Next 5 years. What did I say? Next 5 years. If your turnover for all the 5 years is up to 2 CR, follow 44 AD only. Show 8% every year. So next 5 years, come on, tell me. 25-26, 26-27, 27-28, 28-29, 29-30. Turnover less than equal to 2 crores. Turnover less than equal to 2 crores, less than equal to 2 crores. But in the year 28-29, what happened, you know, in this year? Your turnover became more than 2 crores. And I'm assuming that 3 crore limit is not getting applicable to you. Yes or no? Assuming that the 3 crore limit for 44 AD, minimum 5% of the turnover or less than that received in cash, then the limit is not 2 crore, then the limit will become 3 crore and still you will be able to follow what? 44 AD. I'm assuming that it is not getting complied. So for you, 3 crore limit is not applicable, 2 crore limit is only applicable, and 2 crores you have crossed in this year. You wanted to follow. You wanted to follow, but now you will not be able to follow. Why? Because your turnover exceeded 2 crores. Sure, no? So now you don't have any option. See, for the first 3 years in the slot of those 5 years, for the first 3 years, you followed what? 44 AD. And in the 4th year also and 5th year also, you were supposed to follow 44 AD. But now you will not be able to follow only. You are not yourself coming out now. Here, no, here you were yourself coming out. Even if your turnover was less than 2 crores, less than or equal to 2 crores, still you were showing lower profits. You were coming out on your own. And once you come out of your own, show the lower profits, we will accept, calculate as per regular provisions, take section 30 to 37(1) deductions, yes or no? But maintain books and get them audited if in that year your, what did I say? If in that year your total income is more than basic exemption limit. But here, in this case, your turnover was up to 2 crores and still you were showing lower profits. Meaning that you could have followed 44 AD, but you are not following on your own. But here you wanted to follow. Even if you want to follow, you will not be allowed to follow. Why? Because your turnover only exceeds 2 crores. Now you will yourself come out or you will have to come out. You will yourself come out? No. Now you will have to come out. Now it is a compulsion that you cannot show 44 AD. So in this year, in this year, even if you want to follow 44 AD, still you cannot follow 44 AD. In no circumstances you are allowed. Now in this year, what will happen? In the year 28-29, no, you cannot follow 44 AD. Now do one thing, apply the regular provisions, and by applying the regular provisions, calculate your PGBP income, meaning that you will show taxable PGBP incomes. Now you will take the deductions from 30 to 37.1, and friends, since your turnover exceeds 2 crores and you are not able to follow 44 AD now because your turnover exceeds 2 crores, yes or no? Then here, now you will have to maintain the books of accounts also and get them audited also. Sir, what about the total income more than, no, you don't have to see here. You will see only here. Getting my point? And for the next 5 years, you cannot follow 44 AD. There is no such restriction over here. Next 5 years, you cannot follow 44 AD. No, 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 no. That we will apply only if you yourself come out. But here you are not coming out. You have to come out because your turnover was more than 2 crores. So can I say in this year, meaning that after this next 5 years, 44 AD cannot be followed. This restriction no will not apply only. This restriction will not be applied. Immediately next year, your turnover was less than 2 crores. You can again come in 44 AD. Or okay, in the immediately next year, no, 30-31, your turnover came less than 2 crores. You can again start following 44 AD. But that is very difficult to happen now. Why? Because in business, no, once your turnover starts increasing, business grows every year, no? So once your turnover starts increasing, no, and it has crossed 2 crores, no, in the following years, in most of the cases, the turnover will be more than 2 crores only. So there are less chances that you will again come back in 44 AD. So even if you are again coming back, we will allow you because there are very less chances of coming back now. Because once you cross 2 crores, now from here you will grow only. More than 2, more than 2, more than 2. But what if in any year again you came down to 2 crores or less? Again start following 44 AD. For the next 5 years also you will be following 44 AD. And if you come out, then for the next 5 years you will not be allowed. Got it, sir? Hello? Now, last point I am discussing. Fifth year, what? 29-23. So, fifth year, once you cross 2 crores now, Akshaya, once you cross 2 crores, then forget about the fifth year now. You had to follow. But what if in this year only you cross 2, next year you are going to cross 2 only, no? But sir, next year I did not cross 2. My turnover again came 2 crores or less. We are not telling you know that you cannot follow for next 5 years. So in the year 29-23, again your turnover is less than 2 crores. Start following again. Who stops you? You are not yourself coming out. You have to come out. So once you have to come out, then for the next 5 years, you cannot follow 44 AD. This restriction will not be allowing. Meaning that in the immediately following year, in 29-30, again your turnover comes less than 2 crores, you again start following that year. And for the next 5 years, you will be following 44 AD only. Provided in all the years your turnover is 2 crores or less, 2 crores or less, 2 crores or less. But it will not happen. Majority of the cases when the business starts growing, no, Once it crosses 2 crores, after that also it will be more than 2 only. So there are less chances that in 29-30 again your turnover will come down to 2 crores or less than that. And if that happens also, no, we are not stopping you to follow 44 AD. Start following. But now this will be the first year. Now this will be the first year. Okay. And after this, 5 more years you will have to follow 44 AD. Getting my point? Provided for the next 5 years also, the turnover is 2 crores or less, 2 crores or less. But it, sure. Okay. Pay attention now. What was my previous year? 24, 25, no? In this year, no? I followed 44 AD. I followed 44 AD. Meaning my turnover was less than or equal to 2 crores? Yes, sir. Did I show 8% or more as my profits? Yes, sir. So now they are telling that for the next 5 years, meaning 25, 26, 26, 27, 27, 28, 28, 29 and 29, 30. If my turnover is 2 crores or less, 2 crores or less, 2 crores or less every year, I will have to follow 44 AD only. 8% or more, 8% or more, 8% or more. I will have to show every year. But what happened in the last two cases? Here I had to come out. And here I myself came out even if my turnover was less than or equal to 2 crores. Sure, no? Now in 28-29, I am coming out. So I will be calculating my PGBP income by following regular provisions. And here also, if you can see, in 28-29, I have to come out. So I will be calculating my PGBP income on a regular by following regular provisions. So if I say once I start following 44 AD, next 5 years I have to follow. But in 28-29, what happened, friends? In 28-29, something happened. No. What happened? Tell me. In this year, even if my turnover was less than equal to 2 crores, 8% or more, I did not show that. I showed lower profits. In my first case, I discussed this only. No, even if my turnover was not exceeding 2 crores, it was 2 crores or less. So in this year also, I was supposed to show 8% or more, but I did not show 8%. I came out and I showed lower profits in this year. So what I will do in this year? Come on, tell me. I will calculate my PGBP on a regular provisions. By following regular provisions, I will have to follow here. Or what was the second case? In this year, my turnover became more than 2 crores. So even if I want in this year, I cannot show 8% or more. I cannot show this. I cannot follow 40. Here I am myself not following. Then for the next 5 years, I again cannot come back. Here I have to leave. I cannot follow 44 AD. Even if I want to, I cannot follow because my turnover was more than 2 crores. So there is no restriction that for the next 5 years, I cannot again come back. In the next year only, if my turnover becomes less than or equal to 2 crores, I can again come back to 44 AD. In the next year itself. So here there was a restriction. In the first case, in this case, there was a restriction. No, wait, in 28-29, my turnover, even if it is less than equal to 2 crore, I had to show 8% or more. I had to follow 44 AD, but I did not follow. So I am showing lower profits in this year and I am following regular provisions. So what will happen? Next 5 years, no 44 AD. Next 5 years, no 44 AD. This restriction is applicable here. Okay. Next one. If my turnover exceeded 2 crores, Even if I want to show 8% or more, will I be able to show? No. So I will not follow 44 AD for this year. So I will show the profits as per regular provisions only in this year. Yes or no? And in the next 5 years, no 44 AD. This restriction which was available here, applied here, will not be applying here. Any of the, after this, even in the next year also my turnover comes less than or equal to 2 crores, I can again start following 44 AD. Will you remember this? These two cases we discussed above. Now pay attention. I will calculate my PGBP as per regular provisions. Can you see? In 28-29, I will calculate regular provision. I will calculate regular provisions. So can I say in 28-29, 32, 37, 1 will be allowed? Now it will be allowed because while calculating my PGBP on a regular basis, I will be allowed the deduction 32, 37, 1. Do you remember between 32, 37, 1, depreciation is also allowed under section 32? So in this year, I will have to now calculate depreciation and I will have to claim the depreciation also. So depreciation on what amount will be claimed in this year? The year in which I'm coming out of 44 AD or I cannot follow 44 AD. In that year, when I will be calculating my regular income, to calculate my regular income, I will have to claim 32, 37, 1 deduction. So in that year, I will have to claim the depreciation also, no? So depreciation on what amount I will calculate? Last time, 24, 25, 44 AD I followed, yes or no? So from that year, I have stopped claiming depreciation separately. Hello. But can I say I was claiming depreciation till 23, 24? Can I say I was claiming depreciation till 23, 24? Because from 24, 25, I have started following 44 AD. So 32, 37, 1, including depreciation, I have claimed, it was allowed. No need to claim it separately. In 25, 26 also, I followed 44 AD. 25, 26 also, I followed 44 AD. 26, 27 also, I followed 44 AD. Meaning, for these many years, I did not claim depreciation separately because I was following 44 AD. So all the deductions from 30 to 37, 1, including depreciation, you have claimed and it is allowed. It is assumed. So it will not be allowed separately. Depreciation was not allowed in these years. But it was assumed that you have claimed and we have allowed. So what will happen, the WDV as on 31st March 2024, meaning immediately prior to this year. Immediately prior to this year, whatever was the WDV of the blocks. Getting my point? That would have become opening WDV in 24-25. Additions, deletions, block value, depreciation would have been calculated. Minus depreciation, closing WDV for 24-25 would have become opening WDV in 25-26. You are supposed to do that entire calculation and you have to calculate the WDV as on 31st March 2028. Take this WDV as the opening WDV in which year? 28-29. Getting my point? What is happening? So last time when you claimed depreciation, it was the previous year, 23-24. In that year, you calculated the PGBP income by following regular provisions. Yes or no? Then from 24-25, you have started following 44 AD. So don't stop calculating your depreciation for every year. Calculate depreciation. So what was the closing in 23-24? That will become opening in the next year. Addition, deletion, depreciation. Then again closing for 24-25 will become opening in 25-26. Addition, deletion, depreciation. Again the closing for 25-26. Hello sir. Will become opening in 26-27. Addition, deletion, depreciation. Calculate the depreciation for each year like this. Don't claim them separately under these in these years, because that is not allowed. But calculate that depreciation. By calculating depreciation every year, calculate your closing WDV. Calculate the depreciation for every year, calculate the closing WDV. Calculate the depreciation, calculate the closing WDV. Now the closing WDV as on 31st March 2028 will become the opening WDV in 28-29. And in 28-29, on that opening WDV, in 28-29, on that opening WDV plus addition minus deletion, you are supposed to calculate the depreciation, and that depreciation you are supposed to claim in 28-29. What is happening? Are you all able to visualize the things? Yes or no? So, can I say simultaneously you will keep on calculating the depreciation for also. So, previous year 23-24 was the last year in which you calculated your regular PGBP income. Yes or no? That was the last year when you claimed the depreciation and it was actually allowed. You actually claimed also and it was actually allowed also. So that year, whatever was the closing WDV would have become opening WDV in which year? 24-25 plus addition minus deletion, whatever the value is there, on that calculate depreciation, reduce that depreciation, and you will get the closing WDV for this year. Now that will become opening in the next year. Likewise, you have to calculate for every year. Till which year? Till 27-28. Now whatever was the closing WDV in the immediately preceding year, in which you were following 44 AD, yes or no? So what was the immediately preceding year? 27-28. In that year, whatever was the closing WDV, now you bring that as opening WDV in this year, 28-29. Additions in 28-29, deletions in 28-29, you will get the depreciable value of 28-29. On that, you will calculate depreciation, and that depreciation will be allowed in 28-29. Because during these periods, no, starting from 24-25, 25-26, 26-27, and 27-28, in these periods, no, we did not allow you 30 to 37 separately. But what we were saying, you have claimed and we have allowed. You have claimed and we have allowed. Meaning that for these years, no, depreciation also you have claimed and we have allowed. It is assumed. So don't take that WDV, which was as on 31st March 2024. Don't take that WDV. Take this WDV as on 31st March 2028 as the opening WDV for this year. Will you remember this? Sure. 44 AD over. 2 or 3 small things I would like to tell you now. Number 1. See, chapter 6A, deductions, ATC to ATU. These deductions can be claimed out of PGBP income. Whether that PGBP income is calculated on a regular by following regular provisions, or whether that PGBP income is calculated based on presumptive provisions, will not make any difference. Ultimately, your PGBP income, which is calculated regular basis or which is calculated on presumptive basis, ultimately that PGBP income is going to go in your total income calculation. So in your total income, if regular PGBP income is included, from that you are going to get chapter 6 a deduction. But in the calculation of your total income, even if you put presumptive PGBP income, no, so from presumptive PGBP income also you are going to get chapter 6 a deduction. Just like the way in which you are getting it from regular PGBP income. Yes or no? We are denying only the deduction available under the PGBP head from 30 to 37(1). And once you are not claiming those deduction and calculating your presumptive PGBP income, which will form part of your total income. So in your total income, from your regular PGBP income, we are allowing your chapter 6 a deduction. So we cannot deny it from your presumptive PGBP income. If we deny it, you are not going to follow presumptive provisions. Getting my point? Chapter 6A deductions, the way in which they can be claimed from regular PGBP income, no, in that same way they can be claimed from your presumptive PGBP income also. There is no restriction on that. Will you remember? Sure, sir. Now, next point. See, if an assessee is there, no, so assessee has to pay advance tax. Advance tax during the previous year itself. Now, the advance tax has to be paid during the previous year itself in 4 installments. How many installments? 4 installments. So, in the previous year, first installment due date will be on 15th of June. Second installment due date will be 15th of September. Third installment due date will be on 15th of December. And last installment due date will be 15th of March. So what they are telling you, that if you are an assessee to whom advance tax provisions are applicable, you have to pay your taxes of the previous year in advance. Meaning that in the previous year, keep on earning your income, and out of those incomes, keep on paying your taxes of the previous year's incomes. Whatever taxes are there, keep on paying those taxes in small parts. On or before 15th of June. On or before 15th of June, certain tax, a minimum amount should come on or before 15th of June. If that amount you are not depositing on or before 15th of June, you will be charged interest. So interest, defaults, etc. will happen. Yes or no? There is a minimum amount which you have to pay for advance tax on or before 15th of September also. There is a minimum amount of advance tax installment which you have to pay on or before 15th of December also. And by 15th of March, your entire advance tax liability you should pay. So on 15th of March also, there is a minimum payment, and by paying that minimum amount till 15th of March, your entire advance tax should be paid in the previous year itself. So out of the total advance tax liability for the previous year, no, some advance tax minimum amount you have to pay on or before 15th of June. Out of the total advance tax liability for the previous year, some amount, a minimum amount has to be paid on or before 15th of September, on or before 15th of December, on or before 15th of March. So that your entire advance tax liability is collected till 15th of March in this much, this much, this much amount and this much amount. Minimum this much amount you have to pay on or before each due dates. So the assessee to whom the advance tax installments are applicable, they have to pay their advance tax minimum amount on or before a particular due dates, and there are 4 due dates. Getting my point? We are going to learn these things in advanced tax chapter. Don't worry, very interesting. You'll love it. Okay. But one minute. Are you an assessee? Yes. Are you following presumptive provisions of 44 AD? Yes. Advanced tax provisions are applicable for you or not applicable for you? Advanced tax provisions are applicable for everyone. Even if you are following 44 AD, 44 ADA, 44 AE, any of the presumptive provisions you are following, we will not give you protection that you don't pay advance tax. Bloody, you also have to pay advance tax. You are not relieved. But wait, for others, how many installments are there? 4 installments are there. And a minimum amount has to be paid on or before the due dates of every advance tax installment. Yes or no? Don't worry, we will not apply 4 due dates on you. And we will not tell you to pay a minimum amount on or before these due dates. Do one thing. If you are an assessee following 44 AD, no, so for you also advance tax provisions are applicable, but for you the payment of advance tax in 4 installments were there, no, is not applicable, not applicable, not applicable. But make sure that on or before 15th March your entire advance tax you are paying. That means we are not telling you to come and pay a minimum amount on or before this date. Come and pay a minimum amount on or before this date. We are not telling you that. So don't bother yourself. Pay advance tax as per your convenience. Whenever you want, pay that advance tax. But make sure that your entire advance tax you deposit on or before 15th of March. In whatever way you want to pay, you can pay. Meaning that on or before 15th June, you have not deposited a minimum amount. Will not make any difference. Because that installment is not applicable to you. And in that installment, a minimum amount which was payable, it is not applicable for you. 15th of September, that due date is not applicable for you. On or before that due date, a minimum amount is payable by you, not applicable to you. You pay your advance tax as per your convenience. You have to pay advance tax. But pay as per your convenience, a minimum amount on a particular date. On or before that due date, a minimum amount you have to pay. That restriction is not applicable to you. That requirement is not for you. But make sure that on or before 15th of March of the previous year, no, you deposit your entire advance tax liability. Will you remember this? Sure. Good section, no, 44 AD. Very interesting. Now, if you have understood 44 AD, no, now just see 44 ADA and 44 A will be just a piece of cake for you. Now, let me first wrap up everything. You are a resident individual or HUF or partnership firm, but not LLP. You are doing any business other than business of commission in brokerage, business of earning commission of brokerage, agency business, transport business, or specified professions, 11 professions. Other than these 4, you are doing any business. In that business, during the year, your turnover should be 2 crores or less. Your turnover of the business should be 2 crore or less. Whatever is your turnover now, 8% of that turnover or a maximum amount show as your PGBP income. That's it. We will not allow you 30 to 37(1) deduction separately. We will not allow you 30 to 37 deduction separately. Number 1. Number 2, you are not required to maintain books and not required to get them audited. Cool? Now wait. If your turnover for any year exceeds 2 crore, for example, this year your turnover was more than 2 crores. Can you follow 44 AD? Generally not. You cannot follow 44 AD. Now you will have to maintain the books also, you will have to get them audited also, and you will have to follow the regular provisions. But if in one exceptional case, you can still follow 44 AD, you can still follow 44 AD if your turnover exceeds 2 crore, but it does not exceed 3 crores. And what is that exceptional case? For this year, whatever turnover was there, even if the turnover is more than 2 crore, out of that turnover, 5% or less is received in this year by way of cash. 5% or less. Meaning that if the turnover is more than 2 crores, for that entire turnover, minimum 95% or more should have been received by way of modes other than cash. Then even if your turnover is more than 2 crore, but it is up to 3 crores, still you can follow 44 AD. On that turnover, you can show 8% or more. Yes or no? But wait. You can show 6% of the turnover also as your PGBP income. But 6% of which turnover? This year's turnover, which you have received in this year or on or before the due date of filing ROI of this year by way of prescribed modes. For that turnover, you can show 6% instead of 8%. Done. No need to maintain books, no need to get them audited, no need to claim separately 30 to 37(1). You have claimed them and we have allowed. It will be assumed. Yes or no? Now, once you follow 44 AD, make sure you have to follow it for next 5 years also. Provided in the next 5 years your turnover is 2 crores or less, 2 crores or less, 2 crores or less. Yes or no? And in some cases it can be 3 crores also. In some cases it can be 3 crores also. One exceptional case. Do you remember? No. So if your turnover is within the limits in the next 5 years, make sure that in the next 5 years also you are showing 8% or more. Meaning you are following 44 AD. But during those 5 years, in any of the year, if your turnover, even if it is within the limit, even if you have to show 8% or more, still you can show lower profits in that year. Possible? Yes. But the year in which you are showing lower profits, in that year, please calculate the profits as per regular provisions by claiming 30 to 37(1) deductions. Then maintain the books also, get them audited. But wait, maintain and audit only if for that year your total income is more than basic exemption limit. Everything which I have taught, I am speaking in front of you. Is the things clicking in your mind? Sure? Now wait. In the next 5 years, any of the year, your turnover was less than or equal to the limit, 2 crores. And you were supposed to show 8% or more as your profits. You were supposed to follow 44 AD. But instead of following 44 AD, you were eligible to follow 44 AD. But you did not follow 44 AD. You did not show 8%. You are showing less. So in that year, calculate regular PGBP. Show the lower profits as per PGBP provision, regular provision. Claim 30 to 37(1). Maintain the books, get them audited only if your total income for that year is more than basic exemption limit. But remember, next 5 years now. From this year, after this year, the year in which you can follow, but you did not follow, you are showing lower profits. After this year, for the next 5 years, you cannot follow 44 AD. You cannot. Meaning, even if for the next 5 years your turnover is 2 crores or less, within the limits, yes or no, still you cannot show 8% or more. You will have to now calculate your PGBP income on a regular basis. You will have to claim 30 to 37(1) deduction also. And if your turnover exceeds that limit of tax audit, you will have to get the books audited also. You will have to maintain the books also. You will have to get them audited also. Will you remember this? But wait. In the next 5 years, the year in which you have claimed 44 AD, after that next 5 years, you are supposed to follow 44 AD. But in any of the year, what if your turnover exceeds 2 crores? Then even if you want to follow 44 AD, you will not be able to follow it because your turnover exceeds that limit. So in that year, you will come out of 44 AD or you will be thrown out. You will yourself not come out, you will be thrown out. So the moment you are thrown out, that now you cannot follow 44 AD because your turnover exceeds the limit in that year. Calculate regular. Claim 30 to 37(1). Now you'll have to maintain the books also. Get them audited also. There is no requirement of total income being more than basic exemption limit. Yes or no? And wait. Restriction of not coming in 44 AD for the next 5 years will not apply here. Sure, sir? Sure. And remember, whatever year you are shifting out of 44 AD, in that year, depreciation calculation is very important. Depreciation will be calculated on the amount of closing WDV of the immediately preceding year. So meaning that every year you will have to keep on calculating the depreciation and keep on calculating the closing WDV. And that depreciation you are not supposed to calculate and claim separately. You are not supposed to claim separately because it is already allowed. But if it is already allowed, it is assumed that it is already allowed. So after reducing those depreciation, whatever WDV remains, no, on that WDV now you will calculate the depreciation. Add addition, less deletion for that year. Now the depreciation will be allowed in the year in which you again start following regular provisions. Sure, sir. And this was your 44 AD. Advanced tax provisions. All the due dates applicable? No. On or before 15th March, make sure you are paying full. Chapter 6 deduction, can you claim? Yes. From presumptive PGBP income also it can be claimed. Just the way in which it is claimed from regular PGBP income. There is no restriction on claiming other deductions. Restrictions only on claiming the deduction under the head PGBP 30 to 37. Got it, sir? This was your 44 AD. And one question we solved yesterday. Mr. Shivam. For Mr. Shivam, we had to calculate the profit as per regular provisions, which we calculated yesterday. But today, for that same question, we are going to calculate Shivam's PGBP income as per 44 AD presumptive basis. Come to that question. That was your question number 7, if I am not wrong. Question number 7. Please pay attention on this question now. So how much PGBP income we calculated for Shivam by following normal provisions? See, this is written in front of you. 130, 900. Did we calculate this as per presumptive provisions or we followed regular provisions? Taxable PGBP income, deductions, disallowance, everything we did? No. So if we are doing this, can we do this? Yes. But for Shivam, can we follow 44 AD? First thing, check. Shivam is an individual. So who can follow 44 AD? Individual can follow? Yes. HUF can follow? Yes. Firm can also follow, but other than LLP. So individuals can follow? Yes, provided that individual is a resident. So if nothing is mentioned, Shivam is a resident only. So resident individual can claim 44 AD? Yes, provided his business is not any of those 4 business. His business is a retail trade business. So for retail trade, can he follow 44 AD? Yes, because it is not 44 AA professions, 11 professions. It is not a transport business. It is not a commission or brokerage earning business. It is not an agency business. Any other business, retail business is covered in any other business. Yes or no? And for this business, what is his turnover? Can you see this is his turnover? Sales is nothing but the turnover, no? Now, individual, he is a resident, he is into a business, eligible business, yes or no? And from this eligible business, his turnover is less than equal to 2 crores. Can you say all the conditions to claim presumptive profits are fulfilled? So can he follow 44 AD? The answer is yes, he can follow 44 AD. Now if he follows 44 AD, how much presumptive income he will have to show? Minimum 8% of his turnover. Yes or no? But wait, do you remember we marked something over here and I told you that this is relevant while determining profit under 44 AD? Yes or no? Come to this. Now read this. Assume that the whole of the amount of turnover received by account paycheck or use of ECS through bank account during the previous year itself. Meaning that the entire turnover of 1 crore 12 lakhs, 1 crore 12 lakh 11,500, this entire turnover you have received in this year only by way of prescribed modes. So for this turnover, now don't show 8%. Now you'll have to show 6%. So how much will be the 6% of that amount? Come on, tell me. Calculate. Six 690. 690. So if he follows 44 AD in this year, then as per 44 AD, his presumptive PGBP income will be this much. But if he does not follow presumptive provision in this year, hello sir, then he will have to calculate his PGBP income by following regular provisions, which will be 1,30,900. But in that case, no sir. He will have to maintain the books also. He will have to get them audited also, because he is not getting himself covered in 44 AD. So if he is not following 44 AD, for him 2 crore limit will not be applicable for tax audit. Now he will have to get the tax audit done. He will have to maintain the books. He will have to get the tax audit done because his turnover is more than 1 CR. So now tell me, as a chartered accountant for Shivam, what advice you will give him? They are not telling you to give the advice, but I am asking you, what advice you will give Shivam? That Shivam, please listen to me carefully. I am your chartered accountant. If you follow 44 AD, you can follow 44 AD for your business. And if you follow 44 AD, since your entire turnover is received in this year by prescribed modes, we don't have to show 8%, we will be showing 6%. And that 6% will be treated as your PGBP income. No other deduction will be allowed. This amount you will have to show as PGBP income. But Shimam, what is the benefit here, you know? We don't have to do the regular calculation. Okay, we have to show this much only as PGBP income, which is minimum 6%, or we can show more also. No need to claim 32, 37 one separately. Show this much. And wait, we are not required to maintain the books also. We are not required to get them audited also, Shivam. But Shivam, being your chartered accountant, no, I calculated your PGBP income by following regular provisions also. And your PGBP income as per regular provisions was only 1,30,900, Shivam. So according to me, your chartered accountant, I think that it is better to pay tax on 1,30,900 rather than paying tax on 6,72,690. And Shivam, we'll pay tax on this. We'll save a lot of tax. But the disadvantage will be what, you know? The disadvantage will be, since your turnover is also more than 1 CR, no? For a business, if the turnover is more than 1 CR, separate books will be maintained for this business and we'll have to get them audited. Still, maintenance of books cost will be incurred. Getting the books audited, I will charge some fees. So considering those expenses and the tax on this, still the total amount spent will be lower than the tax on this amount. Getting my point? Calculate 30% tax on this. Calculate 30% on this. Just take an example, 30% tax. It will be 2,01,807. Yes or no? If we calculate 30%. But don't you think for individual, flat 30% is not applicable, slab rates are applicable? So here the slab rates will be applied. By applying the slab rates, there will be tax. And that tax, the tax will be very less amount, but still we will have to pay tax here. No maintaining book, no need to get them audited. Yes or no? We'll have to pay tax. But here, no, we'll not have to pay tax only. Because for us, for individuals, basic exemption limit is 2,50,000. Within 2,50,000, this will be covered. No need to pay the tax. Whatever amount spent will be what? My audit fees and maintenance of books. Now we will check that under which option your outflow is more. That option we will skip. And the option where our outflow is lowest, we will claim it. Getting my point? Everyone? But this advice is not asked. If advice is asked, no, always show this. 1,3900 is lower than what? The presumptive profits. It is better to pay tax on this. Hello? Maintain the books, get them audited, pay tax on this because it is lower than presumptive profits. Getting my point? The additional expense incurred will be what? Audit fees and the books maintenance fees. Still the tax will be lower on this, and the amount of audit fees and books maintenance fees all taken together will be still lower than this, lower than the tax on this income, lower than the tax on this income. Then this is all time better only. Got it, sir? In the question, no, they are telling you to compute. They're telling you to compute what? Compute PGBP under presumptive taxation, which we have just now calculated 6,72,000 something, and also compute the profit as per regular provision, which we calculated last lecture. Assuming he has exercised the option to opting out. See, even if you opt out from 115 BSE or you don't opt out, the 44AD provisions remains same. There is no change in that. Got it, sir? Should I move ahead? This is the one question which we have, which we were supposed to complete, which we did not complete yesterday. We completed it today. Sure. Now coming to one more question. This come to illustrations, because all the questions here, I guess they are covered. Okay, yes. Come to illustrations. Illustration number till 15th everything is done, no? Come to 16th. Mark this question important. Very good question. Okay. Mr. Praveen engaged in retail trade. Mr. Praveen is an individual. Yes, sir. He is engaged in retail trade. Eligible business? Yes, sir. Turnover is 2 crore 98 lakh 50,000, sir. Turnover is more than 2 crores. Usually 44AD not applicable. But there was one exception. Do you remember? Even if the turnover is more than 2 crores, 5% of that turnover or less amount should be received in cash. Then also you can follow 44AD and show 8% of that turnover as presumptive profits. So out of this, 5% meaning 2 crore 98 lakh 50,000, 2 crore 98 lakh 50,000 into 5% if you will do, you will get 14 lakh 92,500. So this year, out of the turnover of 2 crore 98 lakh 500, 2 crore 98 lakh 50,000, out of this only 14 lakh 92,500 should be received in cash or less than that. Then you are eligible for 44AD. Yes or no? Now what they are saying, see, amount received in cash during this year is only 14 lakhs. Meaning that less than 14 lakh 92,500 you are receiving. Meaning your cash receipts out of the turnover is less than 5%. So you are eligible for 44AD even if your turnover exceeds 2 crore. But it does not exceed 3 crore. Yes or no? So now whatever turnover is there, 8% of that we are supposed to show. But wait, we will not show 8%. Why? Because the turnover, out of that only 14 lakh is received in cash, meaning that the entire turnover other than 14 lakhs would have been received by way of prescribed modes only, no? So what is happening? The balance through prescribed electronic modes, even if you do, see, if I would have been your examiner, no, I would not have given this sentence. Only 14 lakh is received in cash, common sense, meaning that the balance would have been received by prescribed modes. So there is no need to say. And it is said by the examiner, then you should thank him that he is giving you a hint that on the entire turnover, don't take 8%. 8% will be taken only on the turnover, 14 lakhs. And on the balance turnover, you are supposed to take 6% only because that would have been received by prescribed modes. And since 3 crore limit we are taking, meaning that the entire turnover, 95% or more is received by what? Prescribed modes. So for that balance, we have to apply what? 6%. So I will take 6% of 2 crore 84 lakh 50,000. Why? Because out of 2 crore 98 lakh 50,000, I will reduce 14 lakhs. On that, I will apply 8%. that is 1,12,000. And on the balance 2 crore 84 lakh 50,000, I will apply 6%. And that 6% will be 17 lakh 7,000. So 17 lakh 7,000 plus 1 lakh 12,000 will give me 18 lakh 19,000. That should be my presumptive income under section 44 AD. I can follow 44 AD, and in that case my minimum income which I will be showing under 44 AD should be this much or a more amount. Okay. Now what they are saying, his income from the side business as per books of account is 15 lakhs, meaning regular provisions. So by following regular provision, he is earning 15. By following regular provisions, he is showing 15. And if he follows 44 ADA, 44 AD, he will have to show 18 lakh 19. Okay. Now, retail trade is the only source of income for Mr. Praveen. Assessment year 24-25 was the first year for which he declared his business income in accordance with the provisions of presumptive. Wait. Assessment year 24-25 means previous year 23-24. So in the last year he showed what? Presumptive provision for the first time. Can he show presumptive provision in this year? Yes. Last year if he followed for the first time, next 5 years he can follow. So next 5 years, this is the first year out of those 5 years. And in the first year, out of the next 5 years, in the first year, the limit does not exceed. So he will have to show minimum 18 lakh 19,000 in this year. But what if he does not show 18 lakh 19,000 and he is showing less than that? Can he show? Yes, he can show. But this year, his total income is more than basic exemption limit, because this is the only source of income, and out of that you are showing 15 lakhs. It is more than basic exemption limit. Your total income will be this much only now, and it is more than basic exemption limit. So now in this year, if you are showing 15 lakhs and not 18 lakh 19,500, lower than this. So this year, now you'll have to maintain the books also and get them audited also. Because this year's total income will be this year's PGBP income only, which is 15 lakhs, which is more than your basic exemption limit. Getting my point, sir? So they are telling you, is Mr. Praveen also eligible for presumptive determination of income chargeable to tax for this year? Assessment year 25-26 means previous year 24-20. Yes, he is eligible, and we have already done that. Okay, no? Even if his turnover is more than 2 crore and it does not exceed 3 crore, still he can claim 44 AD, because this year's cash receipts were only 14 lakh, which is less than 5% of his turnover. 5% of his turnover was 14 lakh 92,500, less than that. Hence he can claim 44 AD in this year also. Sure? If so, if he can follow 44 AD, determine his income from retail trade as per the applicable presumptive provision, which we have already determined, 18 lakh 19. So if he is eligible, then how much amount as per 44 AD should be his PGBP income for this year? 18 lakh 19,500. 18 lakh 19,000, which we have already calculated. Next, in case Mr. Praveen wants to declare profits as per books of accounts from retail trade, what are his obligations under Income Tax Act? Meaning that even if he is eligible in this year, he has to show 18 lakh 19,000 as his PGBP income, minimum this much. He has to show. Can he show lower profits of 15 lakhs? Yes, absolutely yes. Then in that case, what will be his obligations? Since this 15 lakh was the only source of income, meaning his total income for this year will be 15 lakhs only, which is more than his basic exemption limit. So now in this year, he will have to compulsorily maintain the books of accounts and get them audited. These are the obligations. Next one, what is the due date for filing his return of income? Under both the options, if he is following 44 AD and showing 18 lakh 19,000 as his PGBP income, he is not required to get the books audited. He is not required to maintain the books. He is not required to get the books audited, meaning that he is not an assessee who is covered by tax audit provisions. So for him, the due date of filing ROI will be 31st July of the assessment year. But if he is not showing this 18 lakh 19,000, he is showing less, then he will have to compulsorily maintain the books, get them audited, meaning he is covered by tax audit provisions. And now the due date of filing his ROI will not be 31st July, it will be 31st October. Superb question. This gives you the entire idea of 44AD. Got it, sir? Should we move? And you have to mark this question important, huh? You have marked it, no? Okay, very good. Now, coming to the next section. Next section is 44ADA. Which section, friends? 44ADA. Now, do you remember we had a discussion about those 11 specified professions? Doctor, lawyer, engineer, interior decorator, chartered accountant, authorized representative, film artist, company secretaries, IT professionals, all these 11 professions we discussed. So if you are an assessee who is a resident, individual or a firm, see HFs are not covered here because HFs cannot do such type of profession. Such type of professions can be done by only individual or a firm of individuals. Yes or no? But wait. Individual or a firm other than LLP. LLPs are not allowed to follow 44 ADA also. So any individual, any firm other than LLP must be a resident, and that assessee must be engaged in any of the specified provisions of 44 AA subsection 1, meaning those 11 professions you are doing. Now from that profession in this year, if your gross receipts does not exceed 50 lakhs, your gross receipt should be 50 lakhs or less. Then whatever gross receipts you are having from that profession, minimum 50% of that or a higher sum you show as a presumptive income. Getting my point? Here you are not allowed to show 8%. That is allowed in business. Because businesses do have many expenses. They have to purchase the stock also. What stock, etc. you will purchase. In your profession, no. Almost the entire gross receipt, 70-80% of your gross receipt becomes your profit. You just thank us that we are telling you to show only 50% of that as profits. Yes or no? Don't ask for 8%. 8% is available only for assessees engaged in any business. For a specified profession, what will be your expense? Entire gross receipt, 10 to 20%, maximum 30% you will spend. The remaining 70 to 80% you will save as what? Profits. We are not telling you to show 70 to 80% of your profit, 70 to 80% of your gross receipt as profit, but at least show 50% of your gross receipts as your profits or a higher amount. If you show this amount, no need to claim 30 to 37 separately. No need to maintain the books. No need to get them audited. Presumptive income will be 50%. Minimum 50% of your gross receipt you can show. Sir, what if your gross receipt exceed 50 lakhs? Can you follow 44 ADA? No. Generally, you cannot follow. But there is one exception over here also. If your gross receipt is more than 50 lakhs, but it should not be more than 75 lakhs, then for that gross receipt, out of that gross receipt, 5% or less only received in cash. Meaning that 95% or more of your gross receipt you are recovering in modes other than cash. Then even if your gross receipt is more than 50 lakhs, still you can follow 44 ADA and you can show 50% of your gross receipts as what? Your PGBP income on a presumptive basis. But remember, in this case, your gross receipt should not be more than 75 lakhs. Yes or no? Same to same provision, same to same. Only the profit percentage and limit they have changed. Instead of business, they have taken what? Professions, specified professions. Yes or no? Everything is same. Now wait. Did you understand this much? 50% minimum. So there you had to show 8% or sometimes you can show 6% also. There is nothing like that here. 50% minimum or a higher sum. Getting my point? Whatever gross receipts are there, less than or equal to 50 lakhs. On that entire gross receipt, calculate 50% minimum that you show as PGBP income or a higher sum. But if your gross receipts exceeds 50 lakhs, you are not allowed to calculate presumptive profits. But in one exceptional case, even if your gross receipts exceeds 50 lakhs, still you will be able to show presumptive profits of 44 ADA provided your gross receipts does not exceed 75 lakhs and whatever gross receipts you are having over and above 50 lakhs but less than or equal to 75 lakhs, whatever gross receipts you are having, out of that gross receipt, 5% or less you have received in cash. Only then for that gross receipt you can show what? 50% or more as presumptive profits. Got it? 3237 1. Will you claim? No. No separate deduction for that. Books of accounts will you maintain? No. You will get them audited? No. Chapter 6A deduction available from normal professional income? Yes. So chapter 6A deduction will be available from this presumptive professional income also. Advance tax installments. Advance tax installment. 4 installments? No. Not applicable to you. Only one installment. What? On or before 15th March, meet your entire advance tax liability. No need to come every now and then and pay a minimum amount. Even if you don't do it, okay. But wait, do you remember 44 AD when you follow? Next 5 years you will have to follow 44 AD only. And if you come out, then for the next 5 years, again you cannot re-enter. There was a restriction. Nothing like that applicable over here. Meaning that for any year, if you are following 44 ADA, for example, you are following 44 ADA, you are following 44 ADA in this year. Previous year, 24-25, your gross receipt was less than or equal to, example, 50 lakhs. And in sometimes it can be 75 lakhs also, huh? But in our case, less than or equal to 50 lakhs. Okay. For this gross receipt, 50% or more, you are showing this amount as your presumptive income, meaning that in 24-25 you are following 44 ADA. Are you following 44 ADA in this year? Yes. So there is no requirement that in the next 5 years also you are supposed to follow 44 ADA. If you don't follow 44 ADA, you are showing less profits. Then for the next 5 years again you cannot follow 44 ADA. That requirement is only in the case of 44 AD. Don't apply that here. What does it mean? That in this year if you are following 44 ADA, next year can you show lower profits? Yes. Next year you can follow 44 ADA also. Next year you can show lower profits also. Do whatever you want, no? Getting my point? See, in the previous year, 25-26, in this year, no, your gross receipt were less than or equal to 50 lakhs. So you had an option to show 50% or more as what? Profit. You had this option. So if you would have taken this option, you would have shown profits under 44 ADA. Sure, no? But in this year, no, in this year, what you are doing? You are not following 44 ADA, meaning that you are not following 44 ADA, you are not showing this much amount. You are showing lower profits. Profits which are lower than this amount. Can you show it? Yes. But if you are showing lower profits in this year, this lower profits will be calculated as per regular provisions. Follow regular PGBP provisions. Claim 32-37-1. Now in this year you will have to maintain the books also, you will have to get them audited also, only if this year's total income is more than basic exemption limit. Done, sir? Now there is no requirement that for the next 5 years you cannot follow 44 ADA. Hello? In the immediately following year, if you want to claim 44 ADA, you can claim 44 ADA. You can show 50% or more as your profits. Getting my point? 2 years you are now again following 44 ADA, and in the third year again you are showing lower profits. Do whatever you want. There are no such restrictions which were there in 44 AD. Got it, sir? Everyone, this was your 44 ADA. If in any previous year gross asset is not more than 50 lakhs, then in that previous year the assessee can declare PGBP income as per 44 ADA also, as per normal provisions also. However, if in any previous year PGBP income as per the normal provisions is less than the PGBP income under section 44 AD, meaning that from the presumptive provision whatever income you are having, you are showing lower profits as per regular provisions, then the assessee can show such lower profits. Yes, he can show, but in that year he'll have to maintain books of accounts, he'll have to get them audited, he'll have to claim these deductions. Only if his total income for that year is less than equal to, is more than basic exemption limit, only then he will maintain the books and he'll get them audited. No restriction of showing presumptive PGBP income for 5 years applicable as it was applicable under 44 AD. 44 ADA done. Will you remember? Now that same question which they had given no for 44 AD, they can redraft the question by including any specified profession. Redraft the same question. If you want no, you can also make one question out of that. If you have understood 44 AD, that question, that was one of the most difficult questions which you have understood. Now in that question only, instead of business, retail trade, they will say that he was a interior decorator, meaning a specified profession. Instead of turnover being 2 crore 98 lakh 50,000, they will put a turnover of 60 lakh, which was more than 50, but less than equal to 70. And they will say 60 lakh into 5%, 3 lakhs. Maximum 3 lakh you should receive by way of cash. How much you are receiving? 14 lakhs? No, you are receiving only 2 lakh. Less than 3 lakhs within 5%. So can you follow 44 ADA? Yes. How much you will show? If you follow 44 ADA, how much you will show? For this 2 lakhs, you will show 50%. And for the balance also, you will show 50%. For the entire 60 lakhs, you are showing 50% or more. So 60 lakh into 50% will be how much? 30 lakhs profit you will have to show minimum. But you calculated regular, and as per regular provision, your profit was only 22 lakhs or 20 lakhs. It will be given in the question, just like the way it was given 15 lakhs over there. Same to same question, they can twist like this. And you'll have, yo, new question. What new question? Same thing you have doing, and if they are twisting few details, you get confused. There's no need to confuse also. What will be your obligations? If you don't follow 44 ADA, don't show 30 lakhs, show less than that. What will be your obligation? Books of accounts maintained, get them audited, but do it only if that year's total income is more than basic exemption limit, which was 20 lakhs, more than basic exemption limit. Done, sir. What will be your return filing due date? This only, which you have shown in both the options. Done, sir. Should I move ahead? Next, last section, 44AE. See, in 44A, those assessees are covered who are transporters. So you are in the transport business? The answer is yes. So assessee can be any person. That assessee is in a transport business, meaning that his business is plying, hiring, leasing of goods carriages, passenger vehicles or goods carriages. So the bus operators cannot come and claim this 44A. Only the transporters who are in the business of goods carriages, running the vehicles on hire for carriage of goods like trucks, lorries, tempo, etc. Yes or no? So your business is to plying, hiring, leasing of goods carriages. Please mark this thing important. Goods carriages. And one more requirement. And you should own goods carriages. You must be the owner of goods carriages. If you are not owning a single goods carriages, no, This section is not made for you. This section is made for only those assessees who owns goods carriages and runs those goods carriages on rent, plying, hiring, leasing their own goods carriages, meaning they are the owners. And during the previous year, they must not own more than 10, meaning that throughout the previous year, from the first day till the last day, the total number of goods carriages owned by you should be 10 or less. Meaning you are not owning more than 10 goods carriages at any time. Even for a single day, the number of goods carriages owned by you is more than 10. No, even for a single day, you cannot come under 44A. Meaning that throughout the previous year, from day 1 till the last day, the total number of goods carriages which you are owning should be 10 or less. 10 or less. 10 or less. Only then you can come under 44A and show presumptive profits of 44A. So these are the eligibility requirements. If you are doing such business and satisfying such condition, only then you can come under 44A and show presumptive profits as per 44A. Now 44A tells you to show this much minimum amount. This much minimum amount you have to show as your PGBP income or a higher sum. How much you are supposed to show, minimum 7,500 per month or part of the month of ownership of that vehicle in the year. So if you are the owner of a vehicle, you have to see that for how many months you are the owner of that vehicle. For how many months you are the owner of that vehicle in the previous year. For every month of ownership of that vehicle during the previous year, you are supposed to show minimum 7,500 per month as income of that vehicle. Minimum 7,500. Even you are the owner of that vehicle for a part of the month also, no? For that part of the month also you are supposed to show 7,500 minimum. Meaning that part of the month will be treated as full month ownership only. So if you are acquiring a vehicle in the month of July, you have acquired the vehicle on 13th of July. So did you become the owner in the month of July? Even though you did not own for the full July month, but since you became the owner in the month of July, start counting the ownership from July month. Full July month will be counted. So July to March, how many months? 9 months. Your ownership is 8 months and some days of July. But those days of July will be counted as full July. 1 month will be fully counted. Yes or no? What if you are selling one vehicle? April month, you had a vehicle. And that vehicle, that goods carriages you are selling. You are selling that vehicle on 2nd of September. Have you sold the vehicle on 2nd of September? Yes. Meaning that you are owning that vehicle from April to August. Full 8 months. And the 9th month, only 2 days you own. Don't worry, that 9th month will also be counted. Even if you own that vehicle for a single day in a month, no, that entire month will be counted. Part of the month ownership also, you are supposed to show 7,500 and full month ownership also you are supposed to show how much? 7,500. Minimum this much you should show as the income of the vehicle. And see, income will be calculated based on the number of months ownership and not on the basis of number of months use of the vehicle. Even if you are not using that vehicle for the full year, no. But since you are the owner of the vehicle for the full year, you will have to show this much income, minimum. Getting my point? Or a higher sum. Even if you are the owner of the vehicle for 12 months and you are using that vehicle only for 8 months in your business, still for the full 12 months, the income will be calculated. Not for the months of use, but for the months of ownership, this income you have to show. Every month ownership, minimum this much amount, or even part of the month's ownership, you are going to show this full amount. not the proportionate amount. See, this much amount is for the full month. Then for 20 days of the month, how much amount should be there? No, no need to calculate that. Part of the month also, full amount you have to show. Understanding? But this is applicable for all the vehicles which are not heavy goods vehicles. If you are the owner of any heavy goods vehicle, no? See, what is heavy goods vehicle, you know? The vehicle whose weight along with the load capacity. What did I say? The vehicle whose weight along with the load capacity, meaning gross vehicle weight. So vehicle body, entire body of the vehicle, there will be some weight of that body, plus there will be some load bearing capacity. How much this vehicle can carry as a load? Yes or no? So if that vehicle is loaded fully to its maximum capacity, that weight plus the vehicle weight, both taken together is the gross vehicle weight. Now, if the gross vehicle weight of any vehicle, hello, if the gross vehicle weight of any vehicle is what? 12 tons or more than 12 tons, more than 12 tons, then that vehicle is what? Heavy goods vehicle. If the gross vehicle weight is more than 12 tons, then that vehicle will be treated as heavy goods vehicle. And for such vehicle, if you are showing 7,500, we will not accept. We will take minimum 1,000 rupees per month or part of the month as income for every ton of that vehicle weight. So if that vehicle weight was 18 tons, so for every ton of that vehicle weight, we will take minimum 1,000 rupees as income. So for this vehicle, you cannot show 7,500. You will have to show 18,000 per 18,000 per month minimum. For every ton of gross vehicle weight, you are supposed to show minimum 1,000 rupees. So gross vehicle weight was 15 tons. So for every ton, you are supposed to show 1,000. For this vehicle, you have to minimum show 15,000 rupees per month as income. If the gross vehicle weight of the vehicle was 21 tons, then every ton 1,000, meaning 21,000 per month or part of the month ownership, you will show as income for this vehicle or a higher sum. Got it, sir? If you show minimum this much or minimum this much or a higher sum as per 44A, that will be presumed to be your PGBP income. No need to claim 32, 37(1). No need to maintain books. No need to get them audited. Minimum show this much. Getting my point? Now, if in any year you are satisfying the conditions of 44A. So in that year, you now have two options. You can show 44A also and you can show normal, regular income also. Now you decide, no, what you want to show. If you are showing minimum this much, no, 30 to 37(1), not allowed, books of accounts not to be maintained and no audit. But if you are not showing this much amount, you are showing a profit calculated as per regular provision and that profit is lower as compared to this. Can you show that lower profits also? Yes. So calculate regular. If it is more, show that. Or at least show this much. Yes or no? But minimum this much you have to show. Less than this can you show? Yes. Then calculate regularly. Claim 30 to 37(1). And books of accounts will now be maintained. And they must be audited also. But wait. If your total income is more than basic, no, this requirement is not here. Whatever may be your total income. See, this requirement of total income being more than basic exemption limit is applicable only for 44AD and 44ADA. The moment you will show lower profits for 44A, no, books compulsory, audit compulsory, whatever may be your total income. The restriction of 5 years, not applicable here also. Once you follow 44A, next 5 years also 44A. If you don't follow 44AE, then for the next 5 years, you again cannot follow 44AE. These bullshit things are not here in 44AE also. Will you remember? Chapter 6 deductions can be claimed out of this presumptive income. No restriction on that. And my dear friends, advanced tax installments. All advanced tax installments are applicable here. No relaxation for advanced tax installments given. Relaxation for advanced tax installment is given only in the case of 44AD and 44ADA. Will you remember? So relaxation for advanced tax installment not given here. Relaxation of total income being more than basic exemption limit, only then books will be maintained and it will be audited. If you are showing lower profits, that relaxation is also not given. If you are showing less, maintain the books, get them audited, whatever may be your total income. Oh, transport business, presumptive income, 4 installments of advance tax. Minimum this much you have to pay on or before the due dates. Here we will not give you 15th March, pay the entire amount. No, this will not be here. Getting my point, everyone? Sure, sir. This was 44A over. Done? So now 2 or 3 questions are there. 2 questions are there on 44A. Pay attention. Question number 17. Very easy question. See, Mr. X commenced the business of operating goods vehicle on 1st April 2024, meaning that this business is started in this year only. And he purchased the following vehicles during the previous year 24-25. Compute his income under section 44A for 25-26. Now they are telling you to compute his income under 44A, meaning presumptive income. For some vehicles, 7,500 per month minimum, or even for the part of the month. And if heavy goods vehicle are there, whose gross vehicle weight is more than 12 tons, for those vehicles, he cannot show 7,500. He will have to show minimum 1,000 rupees per ton of the gross vehicle weight of that heavy goods vehicle. Yes or no? So if you see, first 4 vehicles, no, 7,000 kilograms, 6,500 kilogram, 10,000 kilogram, 11,000 kilogram. The gross vehicle weight of first 4 vehicles is how much? Less than 12 ton. No. Last 2 vehicles, last 2 cases, it is more than 12 tons, meaning last 2 are heavy goods vehicle. What is the gross vehicle weight? 15,000 kilogram, 15,000 kilogram. 1,000 kilogram is equal to 1 ton. Meaning last 2 vehicles are 15 ton vehicles. For every ton, how much you are going to show? 1,000 rupees. So for 15 ton, how much you are going to show? 15,000 rupees minimum. And the earlier 4 vehicles, you are going to show 7,500, 7,500. And this you are supposed to show for all those vehicles. These 2 vehicles, this 1 vehicle, this 3 vehicle, this 1, this 2, this 1. Yes or no? For all these vehicles, you are supposed to show this much. But for the months of ownership, so tell me, this vehicle was bought, 2 vehicles were bought on 10th of April 2024. Wait. If you buy any vehicle on 10th of April 24, you become the owner in the month of April. So 10th April to 31st March, you are the owner. 11 months and 21 days. Don't count 11 months and 21, count full 12 months. Because in the month of April, you became the owner, no? Count the full April month also. So for the first vehicle, 7,500 into 2 vehicles into 12 months will be the minimum amount which you are going to show for these vehicles. Hello, sir. So that will be 1,80,000. Second vehicles, 1 vehicle, no? 15th March 2025 you bought. 15th March 2025, meaning only 1 month ownership. Only 16 days ownership, to be precise. But that 16 days will not be counted. That part of the month will be counted as full month, 1 month. So for that vehicle, 7,500 for that 1 vehicle and only for 1 month. So for that vehicle, 7,500 you will show. Yes or no? Next one. Next 3 vehicles you bought in the month of July. Whenever you have bought in July, did you become the owner in the month of July? Yes. Start counting from July to March, 9 months. 9 months, 7,500 into 3. Yes or no? Then 1 vehicle you bought in the month of January. So you became the owner in the month of January, Jan, Feb, March. 3 months, 7,500 for that 1 vehicle. That will give you how much? 22,500. Hello, sir. Next one. Please check. Next vehicle you are buying in the month of August. Even though you are the owner of the asset, owner of that vehicle for only 3 days in the August, 29, 30 and 31, still the full August month will be counted. So August to March will be how many months? 8 months. 8 months on this vehicle, on these two vehicles, you will not apply 7,500, you will apply 15,000 because this is heavy goods vehicle. And last vehicle, February you are buying, February and March, 2 months ownership multiplied by one vehicle, 15,000. You will get the amounts. Now add all these amounts, you will get 6,82,500 or a higher sum you can show as your presumptive income under 44A. Done. Will you remember this? Easy, no? Now read the last two lines. What would your answer change if the goods vehicle purchased in April 24, meaning they are talking about these vehicles. See, these two vehicles. Goods vehicle purchased in the month of April were put to use from July. It will not change my answer because the presumptive income under section 44A is calculated based on the number of months ownership and not the number of months use. So we have calculated on the basis of number of months, even though it was used from July. It will not change. It will remain same. Done, sir? Sure. Now see, in this question, if I would have made this question, no, what I would have done, Can you see how many vehicles are there? How many vehicles are there in the month of February? One vehicle is there. Okay. What I would have done, I would have given two vehicles over here. So what difference would that make? Wait. If you are seeing the dates, no, they have given dates not in order. The dates are not in order. When the first vehicle will be bought? April. April, how many vehicles you bought? Two. So you are the owner of two vehicles during the year. More than 10? No. Then after that, you are not going to buy in the month of March. After April, you are going to buy in the month of July. How many you are buying? 3. So 2 you already had. July 3 bought. So total ownership 5. Still it is not more than 10. Yes or no? After July, you are going to buy in the month of August. How many you bought in the August? 2. So 2 plus 3, you were already the owner of 5 vehicles. Now buying these 2, you are now the owner of 7 vehicles in this year. Now after August, you are going to buy in the month of January. January, how many you bought? 1. Hello? So now the vehicle numbers become 8. As on January, the vehicle number of vehicles become 8. Now in the month of February, you will go and buy 1. It will become 9. You are going and buying 1. No, it will become 9. And now in the month of March, you are going and buying 1. It becomes 10. So throughout the year, your ownership is not more than 10. Hence, you are taking this 44A. I would have done a small thing. Here I would have given 2 vehicles. So till January, you were having 8, no? Now in the February, you will buy 2. You will already be the owner of 10 vehicles as on March. As on February. When you will buy 2 vehicles in the February, before February till January, you had the ownership of 8 vehicles. So in the month of February, when you will buy 2, you will become the owner of 10 vehicles as on February. Now the moment you will buy that one vehicle in the March month, no, your ownership will cross 10. So at any time during the previous year, even for a single day, the ownership exceeds 10. 44A, not allowed. If I would have been your examiner, I would have done that. And you would have calculated 44A. Full answer wrong. Answer here would be presumptive income under section 44A cannot be computed because during the previous year, the number of vehicles owned by the assessee exceeds 10 as on March. Hence, Presumptive income cannot be calculated. He will have to calculate normal income only, regular provisions. Will you remember this? Sure. So this is the end of 44 AE over here. One more question is there in your practice questions. Question number 8. Mr. Sukhwinder. Mr. Sukhwinder is engaged in the business of plying goods carriages. Okay. On 1st April 24, he owns 10 trucks. Wait. On 1st April, he already owns 10 trucks. Okay. Out of which 6 are heavy goods vehicles, and meaning that the balance 4 are light goods vehicle. If 10 are owned, then out of that 10, 6 are heavy. So remaining 4 are light goods vehicle. So for 4 vehicles, you are going to show how much? 7,500. And for these 6 vehicles, you are going to show how much? 15,000. 15,000 kg each. Yes or no? Gross vehicle weight. 15,000 kg means 15 ton. So per ton how much? Per ton 1,000. So 15 ton 15,000. Okay. On 2nd May, he sold one of the heavy goods vehicle. On 2nd May, he sold one of the heavy goods vehicle and purchased a light goods vehicle on 6th May. Wait, in the month of May itself, no, in the month of May itself, he removed one and he brought one. Hence, his total number is still same. What if he had removed one and bought two? So the total would have reached 11. Not eligible for 44A. But see, he is very smart. He is removing one vehicle and in that same month, he is buying one vehicle. And see, removing first on 2nd May. And then on 6th May, he is buying. If this would also change, no? Buying first and then removing, then also it will become 11. 1st April, how many vehicles? 1st April, how many vehicles? 10. On 2nd May, he is selling one. So it becomes 9. And on 6th May, he is buying one. Then again it becomes 10. Does not exceed 11. Yes or no? But what I would have done? 10 vehicles. First he is buying on 2nd May one vehicle. The moment he buys, 10 plus 1 becomes 11. He is the owner of more than 10 vehicles. Now even if in that same month on 6th May he will sell one, now that will become 10. But as on 2nd May his total number of vehicles was more than 10, no? He will not be eligible for 44A. Even for a single day, his ownership is more than 10. He will lose 44A. See, this examiner is so good person. 10 out of that, 1 is sold. How much? 9. And again 1 is bought. 10. So it does not exceed 11. Hence you can calculate 44A. Yes or no? Now what they are saying, this new vehicle could however be put to use on 15th June. Bullshit. I don't know when it is put to use. I will be concerned only about month's ownership. Okay, no? So when the new vehicle was bought in the month of May, so ownership started from the month of May. For that new vehicle, the income will be calculated from May itself and not from June. Okay, next one. Compute the total income of Sukhwinder for the assessment year 25-26, taking note of the following data. See, this is PGBP income of Sukhwinder as per regular provisions. His freight income, PGBP income, these are the expenses incurred in his profession, business. Yes or no? After claiming the deduction, his normal provision PGBP income is this much. And he is also getting other incomes of 70,000. See, if he would have followed normal provisions, what did I say? If he would have followed normal provisions, normal. So as per normal provisions, his PGBP income was how much? Come on, tell me. As per normal provisions, his PGBP income would have been 4,45,000 and his other incomes would have been added. Other incomes would have been how much? 70,000 only, no? So his total income would have been 5,15,000. But if he follows presumptive provisions of 44A, so here I will have to first calculate his presumptive PGBP income as per 44A, and then in that I will add 70,000. Then my total income will be a separate amount, different amount. I will have to see which is the most beneficial option. Okay, no? But for that, this income should be calculated. If I would have twisted the question, no? One bought and then sold, then 44A cannot be applied. He has to show normal only. Hello? But since it is not twisted, he can follow 44A. So now 44A income will be calculated. Now tell me, heavy goods vehicle he is having. Heavy goods vehicle. Okay. How many heavy goods vehicle he is having in the beginning? 6. And out of that, 1 is sold in the month of May. 2nd May. So April also and May also, on 6 vehicles you will calculate 15,000. So April and May, for these 2 months, you had the ownership of 6 heavy goods vehicles multiplied by 15,000 into how many months? 2 months only. So tell me what is the total? Tell me what is the total over here. Do it fast. 15,000 into 6 into 2 will give you 1,80,000. Now from the June to March, only 5 vehicles, heavy goods vehicle will be there. Because he is already selling 1 in the month of May. And for that 1 vehicle and the first vehicle, for these 2 vehicles, he will calculate for first 6 vehicles. 6 out of that 1 he is selling in the month of May. So after May, from June, he is not having 6 heavy goods vehicle. He is only having 5. So from June to March, 5 vehicles, 15,000 per month into how many months? Now it will be June to March, 10 months. So calculate this. 15,000 into 5 into 10. You will get 7,50,000. Now can you add all this? 750 plus 1,80,000, you will get 9,30,000. So 9,30,000 will be your total minimum income from heavy goods vehicle. This much you have to show from heavy goods vehicle. This much or more. But light goods vehicle you also had, no? April. How many light goods vehicle you had? April month. 4. So only for the month of April you are having 4. From May it becomes 5, no? So for the month of April, you will calculate for 4 vehicles. April you will calculate for 4. 7,500 into how many months? 1 month. And from May to March, how many vehicles you are having now? 5. Because from 6th May, you have started owning 1 more vehicle, light good vehicle. Okay, no? 5 into 7,500 into 11. So this will be 7,500 into 4. You will get 30,000 over here. And 7,500 into 5 into 11. You will get 4,12,500. Getting it, everyone? So this will be 4,42,500. Everyone getting this? So 4,12,000 plus 30,000, 4,42,500 plus 9,30,000. 13,72,500 or more he has to show. This will be his presumptive income under section 44 AE. Everyone got this? Now if he is following presumptive provision, how much income he will have to show? 13,72,500 plus his other incomes 70,000 will give him 14,42,500. Tell me which is the better option for him? Normal one. We will maintain books of accounts. We will get them audited also. We will follow normal only. We are supposed to pay tax only on 5,15,000. Easy, no? This was your last one. Compute the total income they have told. So in both the options you are supposed to give. Let's see, if you are following normal, total income will be this much. If you are following 44A, total income will be this. That's it. No need to say anything else because they are not asking for your suggestion. So if nobody asks for your suggestion, don't give. If suggestion is asked, only then give. Done, no? Compute total income. But they are not telling you to compute by following 44A or normal. If I follow normal, this will be my total income. If I will follow 44A, this will be my total income. Got it, sir? Done. This is the end of your chapter PGBP. Done. So now, tomorrow we are going to meet and tomorrow we are going to start with agricultural income. 2 questions in this chapter. In this chapter itself, 2 questions are there. But there the concept of agricultural income is applicable. So what I'll have to do, before starting the capital gains, I will have to first finish the agricultural income. Why I am doing that? The reason is, agricultural income, 2 questions are there in this chapter, will be finished. And agricultural income, the concept of agricultural income will be applicable for capital gains also. The concept of agricultural income will be applicable, the few things which will be studying in agricultural income, no, that will be applicable for capital gain purpose also. So first I'll have to make you familiar with few things. Then we'll do agricultural income. 2 questions from here and the remaining questions of agriculture income from your study mat. Agricultural income will be done. Then whatever we have studied in agriculture income, few things will be used in the capital gains. So we will be ready for that thing. Okay. So tomorrow we are going to start agriculture income. We are going to finish also agriculture income. Very small thing, very small topic, but questions are to be done. So half or more than half of the lecture will be for agriculture income. Then we are going to start with capital gains. Okay. So see you all tomorrow. Okay. Till then, bye bye.